What up? How you guys doing? Let's get it. Let's make sure we got some sound. All right, let's make sure we got some sound. Do we got it? Let me see. I'm so sorry. Yep, we're Gucci. It's Gucci. All right, how you guys doing? I hope you guys are great. Hope everything is good with you. Like, share, subscribe if you find this information valuable. I was going over some levels. Still got to clean up some kitty litter I didn't get to, but I'll get that in a little bit. She's sleeping, so it's no big deal right now. Last night, I didn't know I had the chat thing up, and you guys couldn't see the side of my screen. So I was going through a couple levels real quick, and just trying to get a game plan for us on a couple different things. You already know what we're watching: AMD, Carvana, Microsoft, and Nvidia, Amazon, all that good stuff. So I'm going to go through some of them right now. I hope you're doing well. If you find this information valuable, please, if you could, we're trying to get to 100 subscribers. If you could like, share, subscribe. Ask me questions. If there's something you don't know, you want to know. All right. I didn't get into the tape, time and sales, and level 2 on AMD yesterday. For anybody that thought it would be okay to buy this thing up here at 117, 115. Okay, we know we had buyers down there, but level 2 was the tail of the tape. The tail of the tape, whatever the hell that wording is. Maybe I just made it up. I don't know. The time and sales, okay, showed you nothing but selling at the level, before the level, and through the level. Reading the tape is a skill, and everybody needs to do it, because you can say you can break and retest, you can catch a pennant upside. How do you know if it's going to break? You have to see the orders that are coming in. It makes life so much easier. A lot of people don't use them. They just watch the chart. They just trade the chart. That's fine. But maybe you can have some conviction. Maybe you could be sizing up because you're able to see the actual orders that are coming through the tape. You'll be able to read the tape. You'll know. And knowing, last night I didn't talk about this, but as we got to this level, the tape was so red. There was like no green at all. You had no buying. And you saw it firsthand. And that told you that the probability that this level was going to break and not hold was like 80% chance. So you could have held your puts. You know, it was not time to dip buy. That screen was not flashing green at all. So, you know, you guys got to use this stuff. Like right now, you see how this right here, I would say is a little 50-50, but it's more to the buy side. You see how there's more green than there is red? Okay? It's important when this thing goes. You're going to start getting, you know, and you can use it with the chart. It's so important, guys. It is. It makes trading so much easier. Your probability and you leave the uncertainty out. You know, whether you're doing a break and retest or a break out of a pennant or whatever, you know, it really helps. There's a skill that goes into it, and it's as easy as knowing the skill is how fast is it running. Like if it's running down the screen and it's just, you know, so if we're going to come into resistance, right? If we say we have 200 as resistance, sorry to start off like this, but I need this to be said because I didn't get into it last night. Last night's live stream was too long, and I have to work on that. If you say I'm going to look for a resistance at 250, you're just randomly using the chart, and you have no idea if it's going to break through 250 or not. Okay, whether there's news or not. The time and sales will tell you. Right now, there's a lot of selling. You see how it's like all red? There's very little green. And when it starts to speed up, if you are at 250 and it's resistance, and this thing is just filled green, and you don't have like a brick wall of just red that runs through it at a certain level and just continues to knock it down and it just stays green, you're like, shit, we going long because we're breaking that level. You'll know. This is how you know if a level is going to stick or not. Because you just seeing the candle go up and down and seeing the battle, you're not knowing what's actually going on. You can see the volume go up and kind of determine But you can't, because whatever the candle is, what if the candle's closing red, if it's down, and you got so many buyers that are just eating it up? Eating it up. You know, like this right here, I'd say this is a little bit centered to the sell side right now. Close to 50-50, but you have a little bit more selling than you do buying at the moment. Okay? It's important because they're trying to knock it down off of this level here. This is kind of why. But listen, this was one of the things that I wanted to get. This was the lesson I wanted to get into last night. Because when we got this break through the levels, guys, it was telling us that it was going to break. It was this level here. When it popped up, you bounced, and then it went back. There was nothing. Like, it was just so red, it wasn't even funny. Okay? I'm pretty sure that it was that level. It was, because we entered up here for the short, tried to enter here. Well, we entered here. We entered here, away from VWAP and 9 EMA. And do you see why we entered here? You see how the 9 EMA is keeping up? Maybe I did have pre-market up. Now that makes more sense if you watched the live stream last night. You see how the 9 EMA is right here, and if I draw my fibs, it'll probably be there. 38.2. So when we broke these levels, it was. I will show it today in the live stream. If we get to a certain level, we're gonna look at the time in sales, and I'll leave it up for you guys so you guys can see, and you're gonna know, like, hey, like, look at that. That right there. If you see this time in sales, if you can see it, I don't know if you're on your phone, you can't even see it, can you? Shit. I'm sorry, but this is more was to the buy side. See, I'm gonna need more screen than that. I'll have it over to the left. It's all good. It's all good. I'll have it over to the left. That way you guys don't have to worry about... Oh, shit. I didn't do the latency thing. Damn it. Shit. Oh, my gosh. Damn it. I'm sorry to cuss, too, guys. I'm so sorry. We might be a little bit behind today. Let's go through the levels real quick so you have them. Man. Alright, so... Fuck. That's frustrating. That's frustrating that I did that. I got a lot going on. You know? Alright, let's do it. Let's do it. So let's go over some levels. Let's go to Tesla, Carvana, and Netflix, AMD, Nvidia, all that. I'm gonna look at Nvidia real quick. We got about a half hour before this bell opens. See what's going on here. All right, we're gonna see what's going on here. Unbelievable. I do apologize. I hope everybody's doing well. Again, if you could, like, share, subscribe. I've been going through a little bit. One of those it's me, not you type deals. It's all good. It's all good. SGMA? Sigma? No, Sigma. It's 40,000. So we're not. That's pre-market. 40,000. I'll write down CGMA, but I don't know if this is going to get any attention. I don't know what the float is and all that stuff. So. Alright, guys, let's do this. Let's do the damn thing. So, if we see up here, we have a flat top resistance on Nvidia. I'm kind of curious. You have TSM, who had some issues. They had like a mixed bag. So now we're starting to get like some of these tech companies that were holding the market up, starting to not, you know, the market's not taking it so well. Your banks did all right. So this is what I was saying by knowing what sector of the market was doing good and what wasn't as far as earnings. What are we going to do for Nvidia if we play Nvidia? All right, let's go to the daily chart real quick. Extension. We didn't. We can. 480 is the max. It's maxed out. I think it's time to start shorting Nvidia. Now I think it's time. And I don't know how far that's going to be. No, I'm also not an idiot. So this is a 30-minute chart, okay? I'm going to be watching 471.35, guys, on Nvidia if I play it, all right? 431.75 is going to be my level. $431.75. Where's it at? 431.75. What? 47. What did I say? 430. Sorry, guys, I'm losing my mind. I'm losing my mind. All right, this is going to be my level. I want to see if we get a rejection if semiconductors are weak. We got to look at Taiwan semiconductors, okay? Let me hurry up and run through this for you guys. All right, this is the area I'm going to be looking to take a short. All right, this is a really nice setup here that I feel is a nice setup. I think it's a good setup. I want to see if we push into this level. So far, yesterday's close or yesterday's low is what is that? 468.99, 469. Let's see here. This is tough because I see a couple different things here. Does anybody want to explain to me what they see? Because we still have, man, we get past this level, guys, we might have a good day today. All right, let's do this. So ultimately, let me go. I'm going to go to Taiwan Semiconductor, but first I want to get. So that's the close. I think I got to stick with this level, but I'm also seeing this. All right, I'm also seeing that. Okay, I'm also seeing that. So what do? Do I go with, do I go with yesterday's close? I'm going to make it this level. I'm going to say 469.13. 469.13. And then what I'm also going to do is I will also put a last leg of resistance. Okay, let's do like a 5-minute maybe. Okay, we're going to do like a 5-minute chart here, and we will because what I'm trying to show you guys is, this level right here. So resistance, it broke it. That's your middleman right there, guys. That's the middleman right there. I could see this thing a couple different ways. No, are you serious? Oh, it's because it's not. I don't want to spend too much time on this. I really don't. So we'll use pre-market lows. Okay. I'm going to put a line right here. So it wicked up. Where did it wick to? Just past it. Boom. Boom. I'm going to look to be short up in this area here. I'm going to be look to be short there. Okay. If we don't catch the bounce, because I ultimately want to get this downside target here of 453 is what we're going to look for. Low 453s, like 453.20, 453.14. Okay. 452 is not off the table either. Okay. 450. 2 is not off the table. Let me put this here. Boom, boom. I'm going to make it red because I got to stick to a plan. Bada bing, bada boom, bada bing, bada boom, bada bing, bada boom. God damn it, life sucks. All right, guys, let's start doing the damn thing. This thing's just giving me 2 different readings, just pretty much in this area. So I'm gonna look for a bounce back. If we cannot get over yesterday's low or yesterday's close, like this area right here, I still feel like this has got to be the level. I feel like this has got to be the level. Bounce, bounce. So it is kind of a key area. You guys see what I mean? It's like, it's tough. It's like a range. It's an area right there that's just really pissing me off. Because I don't know what, I wasn't watching it yesterday. I also feel like it's got a pennant being put in. It's going to be this range. This is going to be the range. As a matter of fact, this is the range. If we can't get up above this level, this 469, so NVIDIA, 469 is where I want to look to be short if we cannot get above it. Resistance. We are also trying to hold support. This is a flat bottom resistance, so I still think we have upside off the bell. Right. 470. 471. And then 469 to 471. So it's like a $3 range, guys. So 469, 471 is where we want to see if we get resistance. All right, if we're going to get some weakness, and we want to see how far, see where we can get to. Ultimate target's 453. 453.25 area. I'd have to see what the whatchamacallit is, but we can look for this previous low here as well. All right, that'll be a nice area that we can look for be taking profits. All right here, like 458.25. 458.25 target. Alright, and I got my level. So let me put a line there. I don't want to do too much now. You don't want to put too much on your plate. Let's see. Bottom resistance, boom. right. So these areas, they're areas. Did it freeze? No, it didn't. All right. If you guys could like, share, subscribe, um, it really helps us out. You know, I'm pretty much losing my relationship in my life over this fucking stream. So, if you guys want to make some money, that's all we ask for. All right, so we got that. Let's look at CVNA. We still have a couple minutes. CVNA. Let's get it, guys. I'm excited for today. CVI's breaking down. I sensed it yesterday. After the break and it could not hold, it pulled back. I would still look for this thing to put in a base. Even if it gets back down to 51. Let me tell you this. Even if this thing gets back down to this area, okay? Carvana is still okay. Carvana's good. Right? Even if we hold this thing and it gets to like here, you know, it's still fine. The long is still intact. But I will be looking for a short, you know, to make some money. I mean, obviously, we're going to watch time and stales, but let's put up the 5 minute, guys. I'm going to be ready to hammer the shit out of this market. All right? Try not to be emotional, but again, I'm ready. I want a new watch. There's things in life that I want, so I'm going to go get it. All right? And I'm not just going to throw shit at the wall either. All right? I'm going to wait for my setups. I'm going to be reading the tape. I'm going to be reading the level 2. I'm going to be doing all the things that I should be doing to put myself in the right position. Okay? And I hope you would do the same. Really don't care what... No, I'm just kidding. Let me not do that. Why is this thing doing that? No. So... let's go, guys. Let's do this. Where y'all at? Let me see y'all in the chat. What up? Where are you guys at? What is up? Let's go. Let's go. There you go. What are you guys looking at today? All right, let's go through Tesla. I mean, guys, I'm telling you, today is going to be one of those days. I'm telling you. It's going to be one of those days. So, put your seatbelt on. Buckle up. Buckle up. Tesla might be along and off the bell. You heard that, right? Tesla might be along off the bell. That's where I'm leaning. SPY's really weak. Of course the SPY's weak because I wanted to grab puts off the bell yesterday and I just couldn't do it in front of those tech earnings. This earnings might be sending us down. We might be getting our downside, guys. 15 minutes to the bell. I'm going to start setting things up. Carvana, we're going to want to be short if we cannot break up above yesterday's close, but really this area right there. Okay? If we cannot break up above this area, yesterday's like high roughly, you want to be short. 56 short. Okay? 56 area. Short the hell out of it. Okay, and then go get a bone-in steak. Something. Come on, let me get my, I still think that this is intact, like I said last night. I still think we might wait till Friday. I think we still have to wait till Friday to see this thing go. Alright, sometimes there's just these certain days that, things like to give you the extensions and like to do things because of reasons like I stated last night. You know, sometimes it's just like that. And it's funny because that's what it's done prior. You know, it's what it's done before. So, I hope you guys are ready. If you could, like, share, subscribe. Be greatly appreciated. Send this to somebody. Not sure how much longer I'm going to do it. Wait, what did I say? I got to get rid of that because it's really bugging me. You just had a bad earnings apparently from Netflix and Tesla. It's your biggest companies. So we might be there, guys. We might be getting there. Is the SPY dumping right now? If you guys have any questions, please throw them in the chat. It's finding support again. Gotta look for the bounce. Look for yesterday's low. Alright, SPY. I'm going to look for yesterday's low. Alright, we're going to look for yesterday's low to give us, to be an area of support. Yeah, man, this thing, this level here is just, that's it. That's that level. Alright, I'm going to start getting my charts up, and then we will get into everything. If you guys have any questions, comments, concerns, throw them in the chat. Just throw them in the chat. Let's do this, guys. I got it. I'm going to be watching a few things, so let's do a 2-minute, I guess. Just throw it in the chat. What are we doing? CVNA? What's our main concern? NVIDIA? Oh, what did TSM do, guys? That's what I wanted to see. Also, TSM. Taiwan Semi. Taiwan Semi. Taiwan Semi. Taiwan Semi. Let's see. So, it is kind of holding right now. It's holding. It is holding. It is holding. Let's say 99. Let's go to the daily. Semis are busted, bro. Semis are busted. They're getting slacked. And look, there is. I think you got to be long Taiwan Semi for a bounce back, honestly. I think we got to be long for Taiwan Semiconductors for a bounce back. I'm just going to do 2 screens, actually, because I need some room here. You guys might not be able to see time and sales in level 2, so I do apologize, but I got to worry about, you know, until we get people on here and a stake, I got to worry about what I got to do to get some money. Alright, that's my ultimate goal, is I got to do what I got to do. Until I don't, and then, you know, then it's a bye-bye. Man, stop. Shit. But again, I hope you guys are doing great today. Alright? Stick to your levels. Start learning the things you need to learn. Or start doing the things you need to do to become a better trader. Alright? I'm serious. The time in sales right here is probably one of the most important. Now, if I'm trading a SPY, the level 2 is nice. But you want to see when we get to this level what's going on. Like right now, you have a decent amount of buy orders. So chances are, look at this green. It's probably going to hold. Now it's pre-market, so do they start lifting the bid? Do they start lifting the offer? Um, it's just really important because I've just heard from so many people. So this is not just one person that they just they wait, they go to a level, they'll do like a breakout for a pennant and catch the thing back. There's just more tools that you have at your disposal to be able to know whether something's going to hold or break. That's all. That's all. You know, I just want you guys to do it. I'm telling you that's what the individuals at J.P. Morgan, Goldman Sachs, all the individuals that are trading at Bank of America, the fiduciaries, like they use all these things. They use ATRs, they use average true range, relative strength or relative volume. They want volume behind it. They use Fibonacci's. They use those things, and this is where they use them to make decisions on to enter and to exit positions. All right, guys. So there's our bounce. Let's see here. What am I doing? What am I doing? What am I doing? I don't need to be there. I need MACD, MACD, MACD. MACD study, let's go. 922 already. All right, so we're going to watch Tesla. Guys, work together. Let's work together. If you guys see like Tesla's rallying or holding, I'm going to call out what I see. All that good stuff. All that good stuff. And I think I'm going to make some changes to my screen. All right, so we have NVIDIA. And we thought short NVIDIA at first because I want to see if it gets past some of these levels that I have here. I want to see what it does here. I'm really curious. Hell, even here at 469, 469, 471, it's this whole area right here that if NVIDIA cannot break up and test this side of the range, I want to be short and at least try to get a test of the 460s to 458. All right, that's just NVIDIA. All right. NVIDIA, I feel like, is also a little bit stronger, though, too, because it's just what I see. It's just what I see, that's all. Let me look at the 15-minute. Nah, I don't know. Never mind. I take that back. 469 to 471 is the area I'm going to be short. Okay. CVNA. We've already broken it. So we'll see if I'm right. All right. I'm looking to be short at the pre-market lows, which is going to be 56. Okay. If we can't break through yesterday's high, it's going to be 56 into 54.91. So 56 to 55 is the area I'm short. And it looks like I got my stuff in the right place. As you can see, it's struggling here. So where is my target on Carvana? My target will be, I want to see if this thing puts in a higher low. So it's going to be around 49.50, 49.60. Okay. I just don't, I just feel like, let me see this real quick. Let me pull this up. Let me go over. So we probably, man, I want to see this thing hold. It cannot, 42.45 or 52.45 is the final destination I have for this thing. All right. So it's fine that it can pull back, but it's got to hold this level where it's at. All right. It's got to hold the level. It's fine if it consolidates. As long as it sits here and consolidates, that's going to make it more powerful to have more money behind it to whoom. So that's fine. Let it pull back and just sit up here in the like 51s. That's what I'm going to give it. So what else do we have? Well, AMD, it got shellacked yesterday. Okay. If you were watching the live, we were short this thing twice. So what do we look to do now? Taiwan Semiconductor is not having a good day. Let's just look for yesterday's low of day. See what we do there. 115.75. AMD 115. It's just I don't know how much more downside you have, but see if we can regain 115.75, and let's see if we can bring in new buyers. We've made it resistance. So we have the levels. We talked about the levels last night. What am I in, the 5 minute? So this is the level right here, 115.71, but 115.75 we'll call it. It's an area. I do. Come on. I do. I think we gotta watch this area right here, guys. 114. All right, we gotta see if it can hold. If we break up, maybe we get some more downside, but 114 is going to be a possible area that I'm going to look to go long if we get there. Is support 114, and I'm going to say 113.95 area. So that's 114, 113.95 area. So it's like a 10-cent range from 113.90 to 114 area. I'm going to look for a bounce. See what happens, guys. Let's just see what happens here. This thing's just been, if we reject 115.75, then and these sellers pack it on, I don't think they will. Maybe we just get a slow grind higher. And look at the S&Ps, watch the S&Ps, watch the Qs, because that's going to help you go with the market. All right, so we got Tesla, Netflix, all that good stuff. I don't think I went over Netflix with you, but I'm not worried about Netflix. I'll worry about Netflix another day. Maybe we check it out. I don't know. Let's see here. Sorry, I'm a little hyper. Going a little crazy. I'm losing my relationship. But it's all good. We're living. You know what I mean? We're here to make some money. It's all good. It's really not all good, but whatever. So, 279.50. 279.50 is the area we're going to look for a rejection. Sorry, guys, I had the mic off. 279.50 is the area we're going to look for a rejection. All right, 2 minutes. Good luck. Please like, share, subscribe, comment, communicate, ask me questions, anything. Thank you guys for joining us. Greatly appreciate it. If you guys see anything, good luck today. And I'm going to call him out as I see it. I'll let you guys know what I do. Again, good luck. Be patient. Manage risk. right, so there goes the S&Ps to the upside. I'm going to look for a rejection on the S&Ps around 455.20 area. All right, 459.20. We're coming into it. 454.70. I mean, sorry. There's the area of rejection I was talking about. All right, that's the area of I was talking about. Sorry. Let's see here. Where am I at? 3 minute. Boom, 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 boom. We just straight smacked it. Come on. Okay. What are you guys looking at? Do you guys have anything on your mind? Anything going on? Sorry, I had to go feed the cat. She waited up until 9:30, right when the bell hit. Come on. Look, it's trying to go, guys. Watch it. Watch the volume. This is low volume here on this bounce, just so you're aware. This volume is low. Look at the SPY go, guys. So we got to think about our longs. If the SPY's going to go, we got to think about longs. Where's Microsoft? MSFT, MSFT. What did I write down for Amazon? This was the area that I was looking right here to see if it would be a area of resistance. 357.65. Yeah, 356.15. There goes Microsoft. I want to see what happens here, though, at these lows. Man, the SPY is ripping, guys. Ripping. It feels like it is, at least. Alright, so there was your rejection. Right there. Pow pow. It's like, no, I'm just kidding. Okay, let's do this. Come on, come on, come on, come on, come on, come on, come on. Come on. Video. See, yo, we're gonna see if we can be long up to 470. 470. We're thinking about the long. Watching time and sales. Boom. Microsoft, guys. And look where the wick was. Okay. If you cannot break up and hold this level, you gotta look for the short. You don't have to do anything, but don't fight the trend. Alright, so here's where we wanted to see if we could be buyers, but it looks like it's going to break. Oh, nah, look at that. Big. It's like 50-50. Yep. There's your buying. They're matching it with the selling too, guys. This thing might roll over. This thing might roll over. This is the area we were looking for. Yeah, let's figure out what we're going to do. I'm kind of curious too. Dude, I feel like Amazon long is the play. It feels like it should be a long, like to get a bounce. So I'm going to throw in an order to see if we can get in and get back up here. Not just yet though. Hold on. I want to let this thing play out. Like, look at that. Boom. They're just, look at that. They're holding this thing up. Damn it. Come on, pull back. Pull back. Give me the pullback. Amazon, I have 134 long. Man, this thing might be just strong as I don't know what. Damn it. I missed it. I missed it. I missed it. I just had it up. Oh my god. Give me the pullback, please. Please just give me him up and pull back. Give me a pullback, please. Oh my god, I took it. I'm such an idiot. I just took it. God damn it. I'm such an idiot. I'm such an idiot. I accidentally got in it. Let me see if I can get this thing out for a break even. What's my fill? Price paid 108. Damn it. I didn't mean to do that. I didn't mean to do that. I had my orders up and I accidentally hit it. Alright, I took it on that extension. I got out and I made a couple dollars. I made a couple dollars on that extension. I timed it perfect. I did not mean to do that. I need to be a buyer here, guys. I need to be a buyer there. I want to buy pullbacks. That's what I want to do. Alright, that's what I want to do. I buy pullbacks. It could just sit here in a range. It could just reverse here. This is what I was thinking. It may just sit here and reverse. I don't know. These buyers are still hanging in there. So Alright, let's get a trade going, guys. Let's get a trade going. Tesla and video. There she goes. Let's go, video. I need to find the momentum. TSM. Microsoft. Sorry, I was just sitting here talking to myself and CBNA. So Carvana broke. Sitting sideways in video. I want to see if Nvidia can reject off this 469.35.
Coming up at 10, existing home sales for June and U.S. leading index.
See right there. See how that's the area of resistance? But look at all the buying. Boom! See that big flash of buying? Look, boom, boom. People are probably going to get short there. Look at the buying, guys. Look how red green this is. Its level's going to break. More than likely, it's going to break. You know, look at that. They're buying the shit out of it, guys. This is why it's important to read time and sales on level 2. Alright? You got some red there. Look how it's green. This thing is just... I want to see the size. See, that's what I say. There was a very good chance that that level was going to break because time and sales. Time and sales. I should have recorded it.
PSQH halted again on a circuit breaker up at Sandy Quebec Hotel. On the way down now, 2023. That's Papa Sandy Quebec Hotel halted down.
What's going on here? Where are my levels? Yeah, it's what I thought. My computer's going ham. Can you guys hear it? Dude, I hope it's okay. I don't think I've ever heard it get that loud. Alright, we're coming up to the area, guys. On NVIDIA. I'm watching NVIDIA right now. I'm watching NVIDIA. What I'm going to do is I'm just going to give it a minute. I'm just going to let this market do what it wants. Alright, I'm letting this market do what it wants. You can see how green that time in sales is on the S&Ps, guys. It's important to know those things. If you had to ask me if yesterday's close is going to break, I think it is. I think 471 breaks. And I'll let you know if I think that if things change or not. I think it breaks, guys. I think we break up through that level. Maybe something's happened that I didn't see, but just from when I brought it up. There's the buying again. See how it got green right off of the 9 EMA? You know? Man, I can't get long this fucking thing. I can't pay that much for. Man, they're buying the hell out of Nvidia today. They're buying it. All right, so it feels like the sellers are stepping up now. Feels like the sellers are stepping up. Look, it's still. It's a 50-50 bag right now. I still feel like the buyers can do it. I really do. Feel like buyers can do it. What do you guys think? Put it in the chat. I don't even know if you guys can see it. You probably can't. They're trying to hold it up.
About 40%.
There's the buying again. I seriously think this level's going to break, guys. Still feel like it's a shakeout. What? Already? Are you kidding me? Look at it. They're buying the shit out of it.
ATTA passive therapeutics at the intraday high, Kilo Tango Tango Alpha. Shares up about 30%. Company earlier announced they rejected the unsolicited bid from Lucy Scientific and announced they offering at 70 cents per share. That's Kilo Tango Tango Alpha.
I still think it's going to break that level, guys. I still think this is a, like, look at all the buying that's going on. Is it just me? I know you guys can't see it. Now it feels like selling's starting to take over. And see, it's... I'm still believing... Oh, man, now I'm mixed. Now I'm starting to feel mixed. And then we get that. What's the S&P doing? Still holding up.
Existing home sales for June, expecting 4.2 million.
I'm getting bigger orders on the buy side, I feel like. I mean, I haven't seen the big sell orders yet. There we go. Boom. Get in. Right there is the buying. Look at that buying right there. I knew it. Huh? All the way up.
Index coming up at 10 a.m. Eastern Time.
Nothing can stop it. It's all the way up. This tape's speeding up down here, guys. What they going to do? Huh?
SCYX, Synexis, and Hanosh Farmer announcing NMP acceptance of NDA.
Damn it. I feel like I should have bought the dip there. There goes the SPY. SPY's breaking down through VWAP. It's consolidating. That was a low volume pullback. I still feel like this stock could go to the downside. It just, everything is telling me that it's like bullish right now. It's not acting like it, but it's just how I'm taking the information. You know, I don't see crazy size on the ask or on the sell side. You know, it's not like there's 10,000, 4,000, 2,000, 1,000 share orders going into the sell side.
$6.30, up about 23% now. Hotel Kilo Indian Tango.
They're just holding this thing down. It's pretty crazy. See that buying? You guys don't see it. I am sorry. You guys don't see it. So
Existing home sales for June, 4.16 million, below the 4.2 million consensus, versus May, 4.3 million. That's on existing home sales. Leading index minus 0.7% for June. The consensus was minus 0.6%.
good thing I did not take that long. That's what we have written down. Short 471. If it can't break above 469, 471. 458.25 is a target to the downside if we get it. So, what do we do? That was a... Come on. That was when the timing sales did not necessarily work, unless I was reading it wrong, not catching the right size or whatever it was that was going on. Remove drawing. Remove drawing. So this is an indecision. Maybe it's an inside out day because we've rallied off the open. Now we're testing previous lows. If this low breaks, watch out. You know, watch out. We got some targets we're going to be heading to. And I still feel like this was a low volume pullback. Like, look how low the volume is. Oh my gosh. Sorry to scream, guys. I do apologize. Alright. And if you guys have any questions, throw them in the chat. So the SPY is going now. SPY is going. What's Microsoft doing? MSFT. So we said short up here. Should be a... Yeah, I didn't put it. Inside day, it looks like. The volume's really low on Microsoft. That's right. AMD actually had some decent volume with Taiwan Semiconductors. Okay. See what I mean? Look at that volume. It's pretty decent. It's decent. So that's still a lot of selling. I would not be surprised if it breaks. If that low breaks. I don't understand if they're just holding it up. What's going on? Tesla. Do you guys have any plays you guys are looking at? Or want? There goes Tesla now. Tesla's to the downside. Tesla to the downside. Tesla, we have 272 area. We're already almost there, unfortunately. Unfortunately, we're already almost there. So, that sucks. Alright, that sucks. It is what it is. Nvidia. Or we can look at coin also. I didn't have too much for coin, but other than this 110 area. Let's see, 15 minutes. It's just consolidating. It's consolidating up there. Nvidia. Come on. Do you guys know of anything that's moving that's got some like nice volume behind it? I think this is our target if we break the lows. 458. We gotta look for 458, guys. Damn it. See, the level 2 threw me off. Time of sales threw me off. Damn it. It's giving it to us, man. Look at the volume, though.
China sent military exercise with Russia the last 4 days in the Japan Sea.
Again, do you guys, if you guys see anything with momentum and all that stuff, okay, that's cool, man. That's what's up. Hope you're doing good this morning, Deontay. It's good to see you, bro.
Coming up at 10:30, natural gas storage.
Oh, shoot.
Build of 40 BCF.
Amazon. That's right, Amazon. Yeah, I got messed up on AMD yesterday. She messed me up. She messed me up. It was me. It was me. So Amazon could not break to new highs. Let's look for this pullback. Amazon might be a decent setup. The volume's kind of light. It might be a decent setup. So we will go here. Close to the low. Isn't that funny? Isn't that funny? And I kind of put it ahead of that move. Now it's just going. Jesus Christ. Guess I gotta wait. We gotta wait for the bounce back. Wow. What sectors are strong? Let's see what IWM is weak. IWM is weak. Qs. Okay. Qs are weak. Everything is weak. What's TLT doing? TLT. TLT is weak also.
Spiking to new highs. $11.22, up 56%. Papa Romeo Foxtrot X-ray PRFX.
Hi, Turkey. Hi, buddy. The little girl joined us. The little baby girl. I know, I know. Yeah? Oh, yeah? So it's trying to hold that level. That's good. That's what we want to see. That's what we want to see. It's got to hold up. Video. Wow. That one hurts. Yeah, I see. I know, man. I can just know. I know by that move, and when you said that, bro, I know, man. That's what's. I'm happy for you, bro. I know them spy calls paid. Oh, I know they did. That's man. I love what you're doing, bro. Don't fight the trend. You know what I mean? It's going up, we're buying calls. It's going down, we're buying puts. We're shorting. You know. This is gonna be so we've cracked it. I still don't trust it. I really don't. The volume's okay. The volume's not bad. It's not great either though. I feel like this thing could just put in a big pennant like throughout the day. I need to find out what sectors are doing what, like what's strong and what's weak. I know if I wonder if like what oil's doing. Hold on. Let me see what there goes the SPY. SPY just cracked the low of the day, guys. Gotta be kidding me, man. Do you guys see this on my chart right here? You see this? I literally did this morning. And I was watching time and sales. I wanted to be short right there. If we couldn't get above, I got to go short. So why is it that I did not get short when we cracked through that level? Probably because I had the Fibonacci retracement up and figured there might have been a bounce. All right, I got to wait for the bigger moves. What is it? Is it green? Is it Nvidia is down 1%, 1.7%. Wow, this is I gotta wait for the pullback. I have to. Gotta wait for the pullback because it's missed opportunity right there. right to yesterday's close, and it decides to get weak. So here's something that's good. Look at the 38.2 Fibonacci. It lines up right with the low of the low, not the low of the day, but the morning support that it put in. You know, it rallied off the bell. Well, at first it went down and then came up, but it sat here in this range. See if they'll give us a pullback into 465. They give us a pullback into 465. I'll look for a few dollars some more of downside. I don't know if they're going to give it to us. The SPY's still falling, so fuck. It's going to crack. God damn it. I knew it, man. I knew it. Well, we can kiss that one goodbye. Looks like I might have to scalp the SPY or do something. Looks like I gotta change plans. Looks like we might have a decent day on our hands here. SPY's only down 0.2%, by the way. So it's not like it's a big, ugly day. But if we continue, I told you guys, Thursdays we get a lot of momentum. Thursdays are the days we look to get momentum. No. Keep Thursdays on your list. At least the beginning of the year. Through the first 6 months of the year, Thursdays were the days that we get some nice volume. And like momentum. And I was thinking about 450 calls yesterday. Or 450 puts yesterday. Shame on me for not getting them. Let's see here. Where are we at here? So I use this to let me know if we're going to have a momentum type of day or not. This is pretty big here, actually. Nah, it's not. It's actually not that. It's not that big. I was reading it wrong there for a second. Okay, so. All right, so everything is negative right now. I need to get back over to NVIDIA. Let me look over here. Alright, so we haven't even cracked pre-market lows. It's a nice little head and shoulder we got going on, isn't it? Left shoulder, head, right shoulder. It's a failed break back up to the top. Maybe we get our second chance to get short somewhere here. You know, we'll see. I would like to see if we can get a pullback. I gotta remember where pre-market was. Okay, so we broke that. That's right. So that's at the lows.
There's making more new highs now, $11.37.
Okay.
Up about 58% at the high. Papa Romeo Foxtrot X-ray.
Say yesterday's low. That's yesterday's low right here.
Coming up at 10:30, natural gas storage.
Some decent volume today, guys, too. Just so you know. Did it freeze on me?
Here to the highs now. Avenger.
Oh my gosh. I'm just begging for a bounce back to here, guys. Pre-market lows, 9 EMA in there. Like, it would be ideal. It really would. And this thing is just putting in. Okay, it's only 10:15. So we rejected yesterday's close. If we reject yesterday's lows, guys, watch out. Watch out below. May not go too far, but it should still give us some downside. I like it. I like it. I like that idea. Nice call out, bro. Yep, 112. That's our buyers. That's where our buyers are at, man. Look at that volume. Look at that volume, man. They're just trying to kill Nvidia today. And from yesterday. That's crazy. That's where it's at, bro. There you go. Oh, Collins, yeah. Collins, good call out on that 118 call on AMD right here at this area, bro. 112.50. You already know. You know what I mean? We got to treat it as a level of support until it isn't. And you should at least expect a bounce back to bring more sellers in if this thing's really going to be weak. I don't want to like sit here and talk myself into something, but you know, this thing needs to like let's just straight down. You want to at least get to 113 something. See if we start to sense a shift in the SPY and everything, or if we don't, that would be a problem. But see if we start going long.
There's a fiscal note getting a pop here on big volume coming in, $4.06. That's NOTE.
That's it. It rejected yesterday's low. It's I ain't going in there. Let's see if it can't break back above. I would love a retest of the initial morning low where we opened. This would be the initial morning low, kinda. I would consider that it. If we can't break up above it. I want to get in. I want to get in on like a pullback. It's just not going to give it to us though. So, got to do what I got to do. And there they go. There's some green orders. Watch level 2. It's there they go. They're just stepping right back in and just not giving you anything. So, whatever. The 453s aren't too bad either. Alright, so there we go. We're getting a bounce. It's 10:30. Jesus Christ. It's so extended. It's so overextended. It's so overextended. So overextended. I just gotta wait. Like, Nvidia's trying to curl itself up. Nvidia's trying to curl itself up. No pullbacks at all. That's so funny. That's so funny. Nvidia's just falling out of bed.
AHI shares were halted on its
Well, it is what it is. It is what it is. Unbelievable. Looks like I'm missing out on the rally. I could seriously. I'm so pissed, guys. I'm so pissed. We're gonna get down to like a 0.5%, then it's gonna decide to pull back maybe. The volume's just increasing on the way down. That's those bad earnings we got. And here goes AMD. AMD's getting ready to crack too. I had a feeling this all was going to happen with these earnings that the market didn't care for from Netflix and Tesla. There's big cap tech names. You know, they have been what's been holding this market up, and I said, I'm like, this is what I mean. When earnings are bad, you can expect, or if they're good, it's all on earnings. And look at the market doing today, the day after they report. Taiwan Semiconductor as well. They're not big names.
Natural gas.
I gotta step away for like a minute or so because I'm frustrated and I could like throw this fucking TV through or this monitor through the window, which I would never do. I'm just um I can't even think straight. Can't even think straight. Metaphorically speaking, um, I always say, be prepared to perform on Thursdays. Thursdays are when we get continuation days. Today's Thursday. We're going to continuation move to the downside. And I'm not a part of it. I need to figure out what it is I need to do to get on. Alright? Because this past week has been frustrating for myself. I've been frustrated at myself. I don't ever. It's not that I don't ever. It's just opportunity needs to be had, and I knew with last night's earnings that we could get something like this. I felt it yesterday, and I said I want to get puts, but I can't sit through this chop and just let these puts get fucking murdered because it's going up and then it comes down and it goes up and it goes down. So I thought about getting them on the close, and I'm like, well, if I get them at the close and earnings are good, then there that goes. It just goes right to the screaming to the upside. So wait for the liquidity. Can we take back this move? That's what I'm going to want to know. I'm going to want to know that now. We make this base resistance. All right, we haven't necessarily turned it into resistance just yet. You've kind of just broke it. You haven't really sat there enough to be able to say, hey, it's resistance. You got to break it, pull back up, boom, make it resistance. If we do we take back Tuesday's move to the upside? Do we get to 450? That long rally. All right, we had a 2-day rally there. Are we going to take this back? I want you guys to look for that. Oh, you're good. Yeah, your chocolate's not that great. So, hold up. Every time I say that, I think of that. Doesn't seem to be that big of a volume day, actually. Is it just me? Maybe it is. It is. It's decent for 10 o'clock. There's consistency. If we look at a 15-minute chart, alright, 15-minute chart, trade line VWAP, I don't know. Yeah, so that's my thoughts. But yeah, I'm gonna step out and I'm actually gonna do the same thing and maybe get some puts, but I know as soon as I buy them, you better sell yours because it's gonna reverse. It's gonna reverse. Look at Nvidia. You gotta be kidding me, guys. I missed this trade. It was one of my trade ideas. I wrote on the paper. I put the flipping red line and I put this line. I said it's $1 range. It's $1 range. We're looking for 468.90 to 471.20. Or 471, I'm sorry. And this was the range. And look at this. Look at that fucking opportunity. I should have known when we broke past this, because I was still somewhat a little bullish. I thought it might go up a little bit further. But I didn't know about pre-market being there. There's just a couple other things. Shit I got to work on. That's it. I'm doing it. I don't give a fuck. I'm just going to not trade. I'm just not going to trade it unless I get a pullback. I can't just waste money. I can't just throw money away. It's not my job. My job is to make that number bigger. I have a number. I got to make that number bigger. That's my job.
Those days are over. That's what the okay report shares pulling back here now. 240, 240.
Oh my god, I could get so upset over this. I put myself in the right position and didn't take. I looked at it from the wrong end. The 38.2 was lining up. I was watching time and sales. Maybe I wasn't watching the level. Something was off. Something was off. If I go back, I know it's probably mixed up now because it's put in that big of a downside. Like, I was looking for the pullback and hold here. And once it broke with that candle, why did I not get long? Oh, probably because I was waiting for the pullback to make this level and pre-market resistance. We never got the pullback. It just straight died. Like it's doing now. Fuck. That's so crazy. That's so crazy. That's so fucked. I don't even care that I'm cussing right now. I gotta go outside, guys. You guys, I will be back. Yeah, it's just really frustrating. I wanted to grab 350 puts 350 puts yesterday for Friday is what I was aiming for. So now I'm like Tesla, Netflix, okay? Tesla and Netflix were weak, so I should have been tomorrow or something. Possibly, it's hard to say. You know, with these tech earnings, you want to be short Qs. You want to be short tech right now. So that's where my head's at. Short tech. So maybe I'll find something today and be able to come in the day tomorrow a little green or something, you know, and just gotta see. All right, see what happens. If you guys don't know, GFAI is going. It is squeezing also, so that might help Carvana a little bit. 340. Let's see. 340. I know it's a ways away, but 340 or 440. 440, right? Am I right? Am I wrong? Am I right? 440. Yeah, 339. 15 minute. Let's say 453, and there is that. Okay. Oh man, and Nvidia is one of the strongest ones. Um, there was a nice wick off of that level, so that's where they're buying. 15 minute trade line B won't cross. 3 minute. Yeah, we should just watch. Listen, here's what's going on. I'm almost certain this is what's going on. You want to watch tech. All right, you want to watch the Qs. The Dow is green. Okay, who reported last night and today? Taiwan Semiconductors, Tesla, Netflix, not good earnings. Okay, so what that means is you want to watch tech to be weak. The Dow is green. Now see if Tesla and Netflix and them, if they don't turn back around, if the Qs, if Microsoft and all your tech stocks like Nvidia, AMD, um, so I'm watching the Qs. I want to see if the Qs can break down because it's obvious that it's technology. You want to be short technology. The SPY has banks and oil and stuff in it. They're doing okay. That's why the Dow is green. The Dow is green right now. All right, look how green it is. Matter of fact, it's green a percent. That's big for the Dow. Look at that. It's rallying. What's not rallying? The Qs. Why would the Qs not rally also? Because we had Tesla, Taiwan Semiconductors, Netflix, whoever else we had in the technology sector that's not doing good. So we just got to keep that in mind. This is why I didn't get 350 calls or 350 puts yesterday because I wasn't sure how the earnings were going to go. So naturally, the SPY should come down. But again, we got to see. We got to see what happens. The Dow is completely green. So I'm looking to get short anything technology right now. It's lunchtime, so you could just get a lot of profit taken. Let it consolidate. Bring VWAP down. Whatever. If it just can't get above this level, something. Then we got to look to be short technology. All right, you want to be short technology and long industrial like banks and Dow stocks. Be long them, short technology. You're going to win both ways. I needed that plan this morning. To just think about it. Just stepped outside and I'm like, what is wrong with me? Why did I not say, hey, we want to look to be short technology? Of course, we had to see if we were going to get a bounce or not out of Tesla and them, but we didn't. So, therefore, we got to be short technology and any other sector that, that has repercussions from that. I mean, if I bring up JP Morgan or something, like look at JP Morgan, it's probably green. So, it's all on the sectors. You got to focus on what sectors did good on their earnings. Look at JP Morgan, green. All right. So, Tesla reported last night. It's dropping out of the sky. Double bottom. Possible rally to test yesterday's aftermarket low. So, missed opportunity there. And it's upsetting. Very upsetting. I should have already known that. I should have already had that thesis made up in my mind coming into the day. That if Tesla and Netflix if they do not hold what they put in yesterday, then we got to be short technology. So we're working up to VWAP. We're past the 50. See, now we're past the retracement level. So we'll see what happens here at yesterday or at our initial opening candle. I'm going to look for a gap down tomorrow depending on where we close at. I'm not sure if I had the mic on when I was saying that, by the way. I was just saying we got to be short technology stocks. Okay? Tesla, Netflix, Taiwan Semiconductors. They reported last night and this morning. They did not do well. JP Morgan, banks, they're on their highs. Dow is a percent green. So we're short technology for now. We're long banks and stuff. So we want to be short on bounce backs. That's what I'm doing, at least. That's my plan. All right, because that way I can have 2 winning trades. I'm going to buy the dip on banks and short the rallies in technology so far. You know, we'll see if it's just those two. You know, those two as in Tesla and Netflix. We'll see if it relates to just Taiwan Semiconductors, Tesla, Netflix. We'll see if it's just them that's doing bad. I'm just gonna give it time. What do I think is going to happen? I want to see if the SPY pushes back down, and tries to regain this level. Okay, that level is 453.66. This is why it's hard to short, but it's a beautiful trade right there. Rejection of prior day's close, got the volume behind it. It got going. I mean, it never looked back. Never gave you at least for me, I felt like it didn't give me the opportunity to make a play, because it looks like it's touching the 90 MA, but is it doing it on this? It was kind of separated, you know. Like when there's separation like that, I can't. Like this is kind of close, but not really. So keep in mind the big rally we had Tuesday. We've taken it back now. We've taken that rally back. So do I still get an opportunity? Okay. Do I still get the opportunity to take a short right here on AMD? Can I get short up there now? We've broken it. I want to see a push up. It might even try to test this double bottom again. Alright. Maybe it takes all day to work its way up there and see if we can get a gap down or something. So I'm going to look for that area right there. 465 is where I want to take a short on NVIDIA if I think the tech sector is going to be weak. That's my goal. I will write it down so people know if they, join or something. And just so you know, my spelling sucks. So, it's okay. You can make fun of me. Alright, looks like they're selling VWAP. And what is that? That's previous. It's the opening candle. So, do I have any other things that line up to help me say I want to be a seller? 50% retracement. Do have that. And that is a low volume push up to VWAP. See what happens, guys. See what happens. Tomorrow's 24th. 450. Let's do it. Let's do it. Damn it. Of course. That's funny. That's so funny. I'm going to be patient because we're getting ready to come into lunchtime. But actually, I am going to take it. I don't care. My stop will be above this area. It's okay. I'll be okay. I'm alright with it. I'm okay with it. So, we'll see what happens. I took a 450 put for tomorrow. And what I'm wondering is if we get a little more downside. If we get back down to the lows. See, the thing is with the SPY is shorting the SPY. It's not all technology. There's a little bit of strength there. And if the Dow doesn't roll over, then the SPY can just continue upwards. So there is strength there. So maybe that's not the best decision right now to be making. I need to be short the Qs. This is where you want to be short. The technology sector. That's the worry. Now the SPY is made up of majority of tech, but I'm also wondering if we can get like a momentum and end up, closing the day around like 0.7, 0.8% maybe. I'm not sure. So it's just, were those earnings that bad? We broke this level. We could be coming back up to retest it. That's what it. See, like I don't want to miss out. I want to get my pullback. Like we have not retested this level to make it resistance. It's support. It just broke it. So, now's not the time. I'm gonna take a loss on that call or that put because, like, I'm trying to hold. See if we get like a little extension down to stop people from going long here.
Papa, a buy from Investors Business Daily Swing Trader. That's XP.
It's a lot of selling that just came through there. That's what we want to see. Is this level going to hold? You got a lot of green. You got not a lot, but you do got a fair amount of green coming in with it. Bang! Right there, guys. And again, wow. Yeah, I covered my SPY. No, yeah, I was gonna say, whoa, hold up. Hold up. Now the Qs are falling down. Let's go to a 1 minute.
United near the intraday high now, 57.09, following their earnings report on Wednesday. Uniform Alpha Lima.
This is gonna be key. Are they gonna hold it? That's what we're gonna watch for. Are they gonna hold this thing up? Or is VWAP and this level gonna squeeze and pop it up or pop it down? Something's gotta give. All right, guys. It looks like it's breaking. Looks like it's breaking. So, the weakness continues. So if we go back, we'll pull up a 15-minute chart. What you want to look for is, do we give the whole move back from Tuesday? Are we going to give that back? Let's see what's there. Because it tells you a lot. Okay, if we give back this day, then I still feel like the market should. I don't know. Look at that, guys. Look how it hit the level. Look how it hit this level. All right. That's it. That's it. That's as far as it can go before we start talking about shorting it. Yeah, man. You too, buddy. Good job today, man. It's hard to say now, man. It's, you know, gotta look at the longer term trend. It's hard to say. If it's as what I'm getting at is if it holds here, like if it goes up and it starts to build a base here, this is the last leg, 46.50 area. All right, that's it. Maybe it doesn't, but this is the last leg I would give it right here. The day of the stuff happening. Um, so that's a big level of resistance that it's got. This is a light volume pullback, so remember that. This is not like this is a high volume sell off. Alright. It's on the radar. Tomorrow's Friday. Options are going to be cheaper. So you can expect maybe if we get down here today, we'll see what happens. Maybe they will anticipate this level holding and start to cover, and you might get a gap up tomorrow. As long as we're above this level and we're sitting here, you went up, you tested it, and you start to put in like a longer term bounce, and it grabs and goes. This is why it could take a little bit. This is why I wasn't in a rush to take it. A lot of these short squeezes, like they'll take a little bit of time. What it is, they build up price. Like go look at like GME for instance. All right, that's just one example. Right, if I go to the daily chart, because I was playing it in October and November before the December and January that it went, you'll start to see, where is this? 2020? Like, oh, come on. Like, you'll see how it goes up. See how it builds price? See how it goes up? And this is a daily. Again, this is a daily. So it goes up. It'll drop a little bit. And then bang. It'll hold the previous resistance. Bang. Right? Hold. Bang. And then it's like bang. Boom. And then it's on. So it builds. It takes time. It's just like it goes up a level. It pulls back. And it holds that prior high. Right around. It could drop a little bit below it. But it hangs it. I know. That's what. That's when you get those real big squeezes. And even on the longer term, like GME was the longer term, not just like a couple days of doing it. Like Carvana's been doing it for a while now. It was at what, $10, $15, went to 20s. Now where are we? You know what I mean? So it'll come. Give it some time. If you're thinking about options and stuff, I would give it like a week or two. What's it do? It goes, it pulls back, bang, goes, pulls back, but it's rising. You know what I mean? Oh wait, GME, that's GME. I'm sorry. 2023. Yeah, will it let me go there? It won't let me go there. Shit. So, just follow the trend. All right, the trend is up. Really, that's what we want to look at right here. This is almost we want this type of volume, but we want big volume. We want it to succeed all this. All right, and this is actually like from this day. You can see that this day that we sold off today, that's it. So let it pull back to here. It's doing what it should do. If I pan this out, okay, see how it goes up, holds, and it just holds. And it builds the base, and then it starts putting in higher lows, and then boom. And then it gets bigger, boom. Goes up, puts in higher lows, boom. Holds the previous high, boom. Goes, boom. And then you're going to hold this. I want to see it hold in this area. You know what I mean? I want to see it hold. See how it's building. It consolidates, takes a little while, boom, and then boom, and it's just going. So we're gonna give it here. I'm gonna give it to this area. Then after that, like it'll come. If it comes, I don't know if it's gonna come, but and there's the break through that area on the SPY, of course. Because I was thinking that there isn't many earnings this week that could really send us back down. You had Tesla, Netflix, they're Fang stocks. So we'll have to see. We'll have to see what Carvana does. I have to see what the short float is also, if it's still big or not. Because you're going to start seeing buyers start stepping in down here at 46. I would imagine you would. So, do I think it can? Oh my god, I'm fucking sitting here talking and the mic was off. Fuck. Sorry guys, I took that short and I was on the shitter. So that was a nice like 15%. Tried to give you guys a heads up though, right there, that was on my mind. Just like everything else that's on my mind. Um, I don't know. I don't know. I don't even know if we have anybody on here. I might just end the stream early. I'm not sure what I'm gonna do. What I'm gonna do. We have one. Nobody. I think we gotta look for a long on Nvidia there. If it doesn't break, might get a nice little trade up to VWAP or something. You got an increase in volume though on the sell side, SPY's going down, all that fun stuff. It's just technology's hurting. Just like my soul. Just like my soul. Be excited. We should just flush it out and put it to sleep, right? Just like my soul. So go ahead and do what you feel, but I feel like this is a bounce back. We're pulling back to test it. This is the middleman for the level, at least for NVIDIA. This is the level I had written down, 459.50. So if this area does not hold, then yeah, it looks like we might have some more downside, but I expect it to bounce at least to VWAP. There should at least be a bounce back to VWAP roughly. Doesn't have to be, but again, tech sector is my twin. There we go, right there. What is that? 457.9, 457.9, 79, 457.9, 457.9, 457.9, 57.9. Boom, boom, and there should be our rejection. So what we have done is taken the resistance we had here, turn that resistance, turn the support, I mean, I'll show you on the SPY. I will show you on the SPY. Alright, we're walking it down. We're walking this stuff down, guys. Alright, couldn't have had a better entry short if I gave it to you, which I did right there. Resistance or support. Okay, we break up above, it's support. Okay, we just break it. We never had the pullback to turn it into resistance, so we went flat. What did we do? We came all the way back up to turn it into resistance, to say, hey, the buyers are now sellers. We flipped back. This is the last leg that we need to make. Look, support. If I go back, support, support. There's no resistance here, so we can turn it into resistance right now and then turn around the rest of the day. But we may just come up to like VWAP or something. But I think we're going to turn this into resistance. It all depends, though. It all depends. But I like NVIDIA for a small long right here to like VWAP. Steve Cohen, David Tepper, where are you guys at, man? Get me a job, something. Just get me the hell out of here. I can read the markets pretty damn well. I mean, I draw the damn patterns out. So maybe I'll have to email it to them, and then they can get me a one-way ticket. Me and my, I can just, I don't know, a one-way ticket. That's what we're looking for. One-way ticket. 453.69. That's what I'm looking for. I want to see if we break back up. We might come back up and test this area here, but we just did the thing, which was support is now resistance. You know, so we're just walking it down. That was a nice trade. Those contracts went from like, I got in at 18 cents, 17. I got in at 18 cents. Okay. They went all the way up to 26 cents, 25 probably. I'd have to look. But I got out at like 24, 25 cents with an entry of 18 cents. So, and that was like right here. It might even have been down here when I entered, because I was watching this here to see if it was just going to chop for a minute or if it was going to break. But I think I got to stop thinking, and I just go short there. Just don't even worry about that stuff. I mean, if you're playing options, you have to. I mean, you don't have to, but, you know, I don't know. Yeah, that's it. That's all I got. It feels like things are changing on AMD too, guys. AMD's got some big changes. We were stepping up the buying. Now it's like after that move yesterday, it's like we've given it all up. Now we got technology earnings that aren't coming in that great. So we're going to be looking for the tech sector for the next week or two to be short, and we're going to be long something that's doing something with itself. Um, Maybe we'll find a new relationship with banks. You know, we'll go here. We will. Bank of America wouldn't be the one that I would suggest, but I mean it's a tradable stock. I would look for, I don't know, we could do like, you could do indexes, you could probably do triple leverage, because you guys got to remember, we still have that. Like you can always use like triple leverage the SPY, triple leverage the Qs. Tesla has a triple leveraged ETF. Um, let's see what we do here. What is it? SPXX, I think it is the triple leveraged SPY, I think. No, let me see. Let me find it. X SPXS is 3 times. Matter of fact, I can just go right to the whatchamacallit. Um, let's see here. Let me pull this up. Let's go here. Maps. Full. Okay. Triple leveraged. No, I want ETFs. There we go. US mid cap, international, Europe. Big Vanguard. So this is what I don't know what if the mic was on or not. I was saying that, just talking about Ultra Pro Short Qs is up because it's down. SPXS is the triple leverage. There's a couple of them. ProShares Short SP500, SDow, ProShares Short the Dow. That's definitely red. Leverage TQQ. There we go. Here we go. Leverage SPXL. There we go. Directional daily bull 3 times. SSO. Ultra short. SPX. So this is 3 times leverage. US Dow. UDow. Ultra QLD. So you have TQQQ, SQQQ. Why don't they have those up there? SPUU, DDM. Wonder. Oh, because it's up here. Inverse and then leverage. Okay, I see. Inverse ETFs. All right. Cool. Cool. Alright, so let's do this. If we think the SPY is going to fall out of the sky, we want to use an inverse ETF to go up to buy calls. That'll be SPXL. So how many of you guys have been trading for over a year? A year or more? Or I'd say 2 years. How about that? Let me put it in the chat real quick.
XXII 22nd century hitting $3.53 at the high.
I'm gonna put it in the chat. Shit. Oh man. I'm putting it in the chat. Just give me 1 second. I just put a question in the chat if you guys want to do it. It's only for me. It's not for anything. It's just I wanted to I just wanted to do something fun. I wanted to kind of just maybe ask questions or something and kind of get, I if we get someone, we get a couple people or something, we'll take it when it comes. So what I'm looking for, I'm kind of watching Tesla here. Tesla breaks this level. There's a gap fill right here. Just want to find out. Just looking at trade ideas. This is the best time to do those things. Those 450s are back at 27 cents, 26-cent bid from 18. So looks like Tesla wants to keep coming down. I was saying, and how far is it? 8-9%, and that's crazy. That's so insane. 80 to 66. What the fuck? So let me actually do a standard deviation on this. But yeah, I'm just going over trades, and it's this is the best time to do it. Finding trade ideas. What is your plan for the afternoon? You're gonna catch a bounce. What is it? What you thinking about? But I put a question in the chat to see if anybody wanted to do there was something I was wanting to do with just questions and stuff like that. Kind of just getting a mindset of where you're at, what you know, what you don't know, and what you if just to kind of get an idea of the how do I say this? Just the understanding of what the person understands, if you guys know what I mean. You know what I mean? And how they look at it. Because it's all going to depend on people, differently. It's going to depend on how much work you, how much time do you put in doing this stuff, and even if it's after work and all that stuff, I don't know. I was just trying to do something. Because I ain't got nothing going on in my life other than this. So, I don't know. I'm getting ready to just go crazy. That's for sure. It's just, let's see here. So what I was wanting to do here is put a standard deviation. Because you'll notice Your standard deviations. You have like 1 through 4. Okay. I wanted to do it. Sentiment. I wanted to like just have the ATRs up, but it doesn't. I don't know if I'll have to look into like what all it gives me and what it doesn't. Um, Spreads, spectrum bars, standard deviation channel. Let's see. So that's a standard deviation channel. Okay. Why would it be like that? That's my question. Why would it be like that? Is this for a daily? Is this for intraday standard deviation? Like what? Okay, so it's all on what you click, I guess. Okay, so we are about a third of a What? This is insane. So, how can I do this to where it's... I don't know. I gotta get my mind off of shit, so I'm gonna go put this in and figure out what the hell I'm gonna do with my life, because I'm going crazy right now. Let's see here. And it's a commercial. I think we could have seen that one coming. You gonna learn today? Wow. I don't. So I want to mess with these standard deviation things. Give me 1 second.
Welcome back. We have some major earnings movers today. Both are to the downside and weighing on the broader markets, the NASDAQ especially. Let's unpack what happened here and what it means for the rest of the names about to report their results in this edition of Earnings Exchange. Starting with Netflix, down 9% right now after last night's earnings beat, although revenue fell short. Subscriber growth was better than expected, up 9%, nearly 6 million new users signing up as the company cracked down on password sharing. But revenue remains a question mark for the rest of the year. Let's bring in TD Cowen Managing Director John Blackledge for more. John, you scooched up your price target on Netflix by about $15 this morning. Modest move.
Yeah, and you're right. Let's unpack the quarter. So 2Q was really actually pretty positive. They had the big sub beat, number one. They had the beat on margins and earnings. And then revenue was a little light, about 1% light versus our expectations. And then 3Q, the guide the member net ad guide was better than what we had in consensus, was right around where I thought buy side was at about 6 million. You had the big free cash flow raised to 5 billion from 3.5 billion, but then the revenue guide was a little light, about 2% below,
Right.
and that was because average revenue per member is down. So it's down 9% today. Expectations were really high going in. It gained 8% in the
I'm
last
trying to get
week.
this
It was up 62% year to date.
standard
going into last
deviation
night.
thing
So
up.
expectations high. It's been running. It's giving some back today, but we ended up raising our net ads and our margin assumptions and our price target to 515 from 500.
Got it. And listen, we're not going to make too much of a move that only unwinds about the past week to the upside, but we could sort of probe a little bit on this revenue issue, especially revenue per user. Is this a result of the ad-supported tier, or what's going on here?
Yeah, well, the paid sharing initiative is the driver of top line growth this year. It's driving, accelerating, albeit a little bit less than we thought, revenue growth in 3Q.
Tesla's just falling out of bed.
Will materially step up in 4Q.
That's something we have in common.
Driving member growth, so it's not driving revenue per member. So with paid sharing, you got
here.
a member being.
I need to get this like set, like, because I could do some really cool shit with this. Because you'd be able. So what I'm trying to do is like just having it for the day, and it would allow us to be able to say, it would give us our profit targets and things of that nature.
So there's no like impact.
Like, let me show you what I'm talking about. So if I could just have it running straight across the stream from the screen for the just for the intraday, and then if I go to like an hourly, then have it for like
could raise price at some point next year, and I think next year's top
a month
growth, at least how we
or 2 weeks. You know what I mean?
Between user growth and pricing growth, or average revenue per member growth.
All right, John, thank you very much. Good to have your reaction today. We appreciate it.
Thank you.
John Blackledge from TD Cowen. Moving on to Tesla now, where the stock is down about 8% today after more than doubling since Jan 1. They also had a beat on both the top and bottom line. Operating margins, though, were the worst in 5 quarters after price cuts. And information on their much-delayed Cybertruck left investors wanting more, as no specific details were given on production and pricing of the vehicle. My next guest is sticking with his underperform rating on the stock, says things really aren't getting any better. Let's bring in Tony Sacconaghi, senior research analyst at Bernstein. It's good to see you, Tony. I think you'd have to acknowledge, right, and maybe we've talked about this before, there's massive upward momentum in Tesla shares, regardless of all the fundamentals we're talking about. What do you think would reverse that here?
Good afternoon, Kelly, and thanks for having me on. Look, I think it's very difficult to know, but what investors appear to be reacting to this quarter is that there's continued uncertainty, and that it's unclear that margins have bottomed. They declined again sequentially. And I think investors want more clarity. They want more clarity on the Cybertruck, but particularly they want more clarity on when margins may stabilize. And I think it could be tough for the stock for the next several quarters, because I do think there's a chance or a likelihood that Tesla will continue to need to lower price to drive the kind of growth that it wants. And along with that price, those price declines, we'll see pressure on margins.
I thought it was interesting that Musk said, when interest rates go up, prices have to come down, because it's not apples to apples, but we're obviously not seeing that so much in the housing market. Is this a case of, Tesla's cutting prices because interest rates and macro, or are they cutting prices because EV oversupply and not enough consumer demand?
I think it's more the fact that Tesla has only 2 products addressing only a small part of the market today. And there's really a limit to how many of those vehicles Tesla can sell. So right now they're selling more than 1 million units a year in the Model Y, and they're selling more than 500,000 units a year in the Model 3. Those are extraordinary numbers for any car. There are only 2 cars in the world that sell more than 1 million units. So Tesla's doing fantastically. The issue is they want to keep growing another 25, 30%, but they only have these 2 units, and they're likely they appear to be reaching their saturation levels in terms of the number of consumers who want them. So they either need to lower price or come out with new models. And The new models are a little ways off. The Cybertruck is coming out later this year, but it'll be low volume next year. And the next high volume cars are likely only coming out in 2025. So if you're Tesla and you want to continue to grow, and you have this relatively limited product lineup, your lever is price, and that's what they're using.
Why do you think they didn't have more to say about Cybertruck in the call last night?
Look, Tesla's planning some kind of formal announcement, likely at the end of September or October, and so they like to sort of do an unveiling and a reveal then. I don't think they wanted to front run. I'm not sure they have a good sense on what availability will be, and also I think pricing is going to be quite expensive, and so they want to tell the whole story, the capabilities of the vehicle and the initial price all at one time.
Fair enough. Finally, so if I'm looking at the right number, 18.1%, I think was automotive X incentives or whatever it's called. Where do you think that number is going to be 12 months, maybe 24 months from now?
Look, I think it depends on how quickly Tesla wants to grow. So certainly we think there's a chance that those numbers continue to go down. It depends on how quickly they can bring down their own costs, but also how quickly they'll need to lower price to drive volume. So we're modeling margins kind of flat to slightly down in the near term. And then it's really up to Tesla next year. They're going to do about 1.8 million units this year. If they want to grow to 2.4, we think they'll have to cut price and margins will go down. If they're content growing and only maybe selling 2 million units next year, then I think the margins can be flat to up.
And either way, your price target is?
$150 a share.
All right, from 265. Tony, thank you for your time today. We appreciate it.
Thanks, Kelly.
Tony Sacconaghi from Bernstein. Still ahead, this former Morgan Stanley financial advisor ran a Ponzi scheme under the firm's nose for a decade. Find out about efforts to hold one of America's largest brokerage firms accountable. A CNBC investigation is next. Welcome back to The Exchange. A former Morgan Stanley financial advisor is headed to federal prison after he admitted running a multi-million-dollar Ponzi scheme under the firm's nose for a decade. How did he get away with it for so long? And why has Morgan Stanley resisted giving the victims their money back? Scott Cohn has a CNBC investigation.
You are about to hear a bald-faced lie.
How do we know it's not a Ponzi scheme?
It's not. I mean, the money's there.
It is a Ponzi scheme, and the money is not there.
Sean, why'd you steal all the money?
Well, thank you. Have a good day.
That's Sean Good, sentenced in May to 7 years in federal prison for running a $7 million scam while he was a financial advisor for Morgan Stanley here at the firm's branch in Wilmington, North Carolina.
You sorry at all for what you did?
Thank you. Have a good day.
Caitlin Andrews, who recorded that phone call, was his biggest victim, losing pretty much everything she had, more than $1.5 million.
It feels violating. It's not so much that I hate him or am angry at him. I'm more just sort of standing here an open wound.
She says she planned to use the money from a divorce settlement to raise her 2 sons.
You stole from your boys.
That's the worst part.
Andrews says she saw no reason not to trust Good, who was already handling her mother's accounts.
He just seemed really invested in our family. Just seemed very trustworthy.
I'm really thinking about a Tesla long, possibly just a bounce back. I don't want to fight the trend either, though. So I don't, you know, I want to get the standard deviation thing figured out. So if anybody knows, like, exactly what I'm looking for, I'd like to be able to just have it on the screen right here. Daily, like this daily would be the standard deviation for the daily movement from the ATRs, I guess. You know, a standard deviation for the ATRs, if you guys know what I'm saying. Because what would you go off of? How would you know what the standard deviation is? You know, I guess from the close. Well, it would be from the close. So whatever the standard deviation is from the close.
Fancy cars, $800,000 in credit card bills.
So effectively, Morgan Stanley is lending money to the victims of this scheme, and that money then gets diverted into Sean Good's pocket.
All of it undetected by Morgan Stanley, America's 6th largest brokerage firm, for 10 years.
They should have detected it and prevented it at the outset.
Lou Straney is a 43-year veteran of the securities industry who consults on arbitration cases but is not involved with this one.
The key here is the red flags very early on. As a supervisor, you're looking at the advisors that work for you and determine whether or not their lifestyle matches their income.
Morgan Stanley declined our request for an interview. In a statement, a spokesperson said after discovering Mr. Good's fraud, he was promptly terminated from Morgan Stanley, that the firm is cooperating fully with law enforcement and working with counsel for Morgan Stanley clients to address their claims. Except it wasn't Morgan Stanley that discovered the fraud.
Talk to us at all about the sentence? About Morgan Stanley?
Law enforcement sources say it was investigators from the IRS and the state. They were looking into Good's finances. Caitlin Andrews and the other victims heard it from them.
I want my money, and I want it in my hands.
That's when she decided to confront Good and get it on tape.
I have 2 boys. I am their only parent. This is all of my money, and you took it.
And you have it all. Caitlin, you have it all. We will get it all transferred back. If you go to, listen, this has been done outside Morgan Stanley. I'm well aware of that. And if they go to Morgan Stanley, they will fire me. I mean, I will lose my job.
It's a key to his scam, investigators say, keeping calls and emails on his personal accounts. The SEC says communicating like that violates record-keeping laws, a path for fraud. And for Morgan Stanley, it's not the first time. Last year, it paid a $125 million penalty to the SEC for off-channel communications and failure to reasonably supervise its employees in an industry crackdown.
See my point about the SEC? Like, what did 125 million have? How does that make that? How about just say, hey, let's start doing this instead of just. This is why Gary Gensler and all them. This is why nobody trusts the government for shit like that.
It doesn't
It's
surprise
like.
me that a person, a financial advisor, would
It's like
steal
there's no reason why the SEC and Morgan Stanley and them, like, they all know each other.
is that a corporate
They all work
entity
together
as
to get
big,
through 2008 and all that.
rich, and powerful
Instead
as
of saying this is what we need you guys to do,
do
blah
the
blah
right
blah.
thing.
You know, it's just funny. It's funny. It's so fucking funny.
Responded with a new statement
Yeah, 125. You're good. Yeah, just, you know, let's just not. Let's not, because who dictates what record keeping is and isn't? Shouldn't be. I don't know. Maybe I'm wrong. I don't know.
And says the firm is working with all clients who've raised claims to amicably resolve them. Multiple victims tell us that not only did Morgan
My point was with the Bitcoin stuff with that.
Attempted to hold them to those loans that Sean Good convinced them to take
This was what I was saying about the fines that are given out, and then it's either you pay it or you fight it, and they fought it and they won, as they should have. They do something knowingly wrong, or not knowingly, they do something wrong. Okay, you pay a fine. You know, it's like a traffic ticket, but come on.
Scott, what other avenues would people have to get funds back other than from him directly, which he
They won't. There won't be no funds. You know why? Because just like FTX, they're going to take all the money between the state courts, the federal courts, the lawyers, the prosecutors, whatever other the North Carolina state, New York, wherever Morgan Stanley's at. Guess what? There ain't, because the government's going to take it and they ain't giving it back. They're going to give it to the lawyers, and they're going to keep it for the state. But they say the courts are for a place to get your money back and stuff like that. You see it with FTX. If that was the case, then the state of New York wouldn't be picking it up. The Bahamas wouldn't be picking it up. It would either just be a federal court case to get as much money back as they could to give back to the people. Eliminate all the lawyers, eliminate the prosecution, eliminate the judges, eliminate the other states, and the court cost that goes with all of that. Have one court case for the situation, not three, not four. You know, if they really cared about getting people's money back.
NCAA's name, image, and likeness policy, or NIL, which allows college athletes to profit. It would create a board that would.
So who's wrong in that situation? I'm just curious.
Co-sponsor Senator Richard Blumenthal telling
Sounds like there is an excess of capital that's deemed illegal, and they're going to take it. That's it. They're going to take it and give the crumbs back to the peasants.
Las Vegas police searched laptops and other electronic devices belonging to Dwayne Keith Davis, also known as Keith D. Police say Davis was one of the people in the suspect vehicle when the rapper was gunned down in a 1996 drive-by shooting. And Broadway seems to have avoided a strike. The organizations representing producers and theater stage employees announced they have reached a tentative agreement avoiding a labor disruption similar to the one in Hollywood. Around 1,500 workers spanning 28 Broadway shows are covered by the anticipated agreement, which has yet to be ratified. Kelly, back over to you.
All right, Pippa, thank you very much. A lot of people were concerned about that as well. Coming up, the creator economy is expected to hit $500 billion in the next 4 years, and 6 web-savvy senior citizens are seizing the moment. In fact, they'll join us to talk about it on the other side of this break.
So what's everybody got planned for this weekend? I'm just curious. Does anybody have any plans this weekend? And even better, where are you guys watching from? Kind of curious about that too. Let's see here. Studies. Again, if anybody knows anything about Thinkorswim, I could use a hand, that's for sure. It's all good. I really don't even care. Standard deviation channel. So what is this? Edit. So this should be 4. No, see, I should have...
Welcome back to The Exchange. Have you noticed the latest trend showing up all over social media and TV? You're seeing more and more people over 50, 60, even 70 years old. ABC just unveiled its first 71-year-old Golden Bachelor, Martha Stewart gracing the cover of Sports Illustrated at 81. A new ad from winemaker Claude Dubois featuring alluring older people. And companies like Viking Cruises catering exclusively to this crowd. Why? As always, follow the money. Baby boomers now control 70% of all disposable income in the U.S. They're also now spending nearly 15 hours online every week, which is why more and more companies are beginning to partner with them. The Retirement House is a TikTok account with over 5 million followers that features 6 seniors who are playing characters while creating curated content. They've partnered with several brands for ads, including skincare company CeraVe. And I'm now joined by the cast of The Retirement House, along with one of the creators, Adi Azran, and CeraVe's co-founder, Tom Allison. Well, this is a fun, full house. Welcome, everybody, very much. Thanks for joining us. Hi. Adi, let me start with you. Where in the world did this idea for the TikTok account come from?
Well, it started with wanting to create something that just, reaches a huge amount of people. I just loved making content. I was doing TikTok marketing at this company called Flighthouse. That's where I currently work. And wanted to make an idea where that I haven't seen before. There's a lot of content houses like the Hype House and all these other houses that were all young, hot people. Now we have old, hot people that, just basically saw something that wasn't being created right at the time. So
Monterey, let me ask you, and you guys are hilarious. I mean, you're almost not safe for Kelly to follow because there's so many it's kind of edgy and there's a lot of, you know what I mean? Like, so who is watching this content? Who does this most? You guys are all professional actors, I should add.
Most of us are, yes, that's very true. But our followers, our bulk is, say, 18 to 24, like that. But those people are taking it to their grandparents and their families, and it's growing and growing. We're over, 5.2 million followers now. We are out there, and we have many loyal followers that want to be like us when they get older.
I certainly do. I want to be like you now, let alone when I get older. Tom,
I get it.
Tom, thank you for clearing up a long-standing question in my house of how to pronounce CeraVe. So I stand corrected. I do love the product, even if I can't say it correctly. Tom, what gave you the idea to partner with this group, and what does that partnership look like?
Well, first, thank you so much, Kelly, for having us and the interest in CeraVe. I think at the end of the day, there's really 3 reasons. One is there's a medical relevance, actually, to the use of moisturization as you get older. You might not realize, but as we all age, our skin naturally starts to break down. So a product like CeraVe makes sense for that generation. So we wanted to use the Retirement House very much for that peer-to-peer piece. The second piece, I think, is that this, the pursuit of skin health really knows no age. As we are all more active in social media, like it or not, basically our lives are on camera every single day. So this idea of having healthy skin absolutely is something that, really crosses generation and bounds. And at the end of the day, the Retirement House, community and the content that they create, like you referenced, it's just fun and engaging.
Yeah.
What we've saw in one campaign is 80 million different users liking the comments, and the amount of engagement in terms of the comments. We knew we had a home run, and we love our partnership with the Retirement House, and we just love the fun, engaging content that they create.
Monterey, who else? Who's out there that you think Bud Light? Who else do you think should be looking your way?
Well, we have had contact with KFC, Kentucky Fried Chicken, Carnival Cruise Line, of course, is a big supporter.
Makes sense
Yeah.
given the demographic. Adi, there's this group, the retirement house, there's the old gays, there's, older stars of the cooking world who are attracting followers. I think you're going to have a hard time fending off the copycats, don't you?
Honestly, I don't think so, because I think that something that we have is so special and it's not super easy to replicate. I know that there's like individual creators, but well, this I just feel like this group of people is so special, and along with Brandon and I, who are creating the content, just the combo of all the thing. I don't know. I feel like it's gonna be hard for people to copy this.
Yeah.
Adi, can I ask how lucrative it is, or is that a dangerous question?
I feel like I wouldn't. I don't. That's something I'd rather stay away from. But
But you're making money on it. Let's put it that way.
happening. It's happening. KFC's coming. Therapy, obviously. Like we're very thankful and love to like partner with brands that really authentically fit with us.
Monterey, I'll give you the last word. Is I don't want to make any guesses here. Is 60 the new 30? Is 70 the new 40? What do you think?
Well, it is for
I
us.
want to
I mean,
take
it's the new
some
80s.
guesses.
I mean,
Where do we close, guys?
Everybody wants to be us when they get older. And we wanted to be us.
Well, the joie de vivre, if we call it that, is absolutely infectious, and I think that's what attracts people the most. Thank you all so much for brightening our day. It's great to talk with you. We really appreciate it.
Thank you so
Thanks, Kelly.
much.
Again, that's the retirement. Bye-bye. You can follow them all on TikTok. And Adi, thanks so much. Adi Osman is the co-founder, millennial co-founder Tom Allison. Thank you as well. He is the co-founder of CeraVe Skincare. Coming up in a week where AI headlines propelled Microsoft and Apple to new all-time highs, what about Google? The company launched a new tool aimed at journalists, but the stock is down more than 4% this week. We've got details on that product and the share moves next.
Alright, Nvidia's holding up. The SPY starts holding up. Where the Q's at? It's just Tesla. What's Netflix doing? The Q's are putting in a new low. Netflix, NFLX. It's trying to swing back up. TSLA, which is Tesla, trying to swing back up. Alright, let's see what we got going on here. I don't know. I really don't fucking care. So these were on a tear. Full refresh, Goldman Sachs, Walmart, Wally World, Johnson Johnson. So healthcare had a big day today. You know what that's telling me? It's telling me the whole market's catching a bid. Not just tech. So
Welcome back.
look at
A
this.
story today in the
Boom,
New York
boom,
Times
boom.
saying Google is reportedly testing an AI tool to produce, yes, news stories. And they're pitching the service to the Times, the Washington Post, News Corp, and other outlets as a way to help journalists. Yesterday, we got the AI story about Apple. Earlier in the week, it was Microsoft. Let's talk about it all in today's Tech Check with our own Steve Kovac. Steve, welcome. Hey. We highlighted that Google has kind of been left out of the rally, at least in the past week or so. I don't know if this move is the kind of thing that would get investors excited.
Not necessarily, but if you just go back to, I think it was last week, they announced they put Bard, their chatbot, in a few more countries and some new capabilities. That shares up like 4%, despite no monetization plans for this. This one's interesting, though. This is something people in our industry have been. We have a job still for now, Kelly, but the idea here is, and look, I asked Google about it because worried for my own employment here. I was like, what is really going on? Google tells me, a spokesperson tells me, look, this is not meant to replace journalists or the reporting they do, like we hear so often from these companies making these AI tools. This is to augment, to help you, to make you more productive, come up with different ways to write headlines, get more creative, just like you would in a real newsroom, trying to talk to your colleagues, bounce ideas off like we do here every day at CNBC. I think that's how they're trying to pitch it. But look, there are plenty of other news organizations using AI just to straight up write news articles. BuzzFeed is experimenting with it. Former Gawker Media, now called Geo Media, they're doing it as well. So it is happening on the more extreme level too.
And I think it's been happening in sports for a long time. The idea that certain things can be kind of automated if you take a box score.
Oh, of course.
I can even imagine, honestly, if you want a stock market write-up, all you need to know is, was it up? If you want literally a 3-sentence description, right. Okay, you can do that. I don't really understand what the tools are helping people. Listen. Us journalists don't necessarily have to be that creative. It's kind of about, hey, here are the facts.
This thing just happened.
Let's stack them together. There's layers of editors and headline writers and things like that. So it's still a little hazy to me what exactly they're trying to do.
Right, and look, there's always these people, this idea of people using this technology. I'll go back to what IBM CEO Arvind Krishna said earlier this year, basically saying the quiet part out loud. We can replace 7,800 jobs with artificial intelligence. New York Times also had a really great story earlier this week about an AT&T call center employee who feels like she's training her own AI replacement.
And there is absolutely one of the first places it's really going to replace
easily.
jobs.
That is number one. And look, Google has demonstrated software before we even started talking about chatbots and the like. Google has demonstrated software that can replace that you can use to make a restaurant reservation, for example. So it's already being done. And look, it's up to companies whether or not these News Corp and all these other journalism companies that are experimenting with it, whether or not they actually want to do it or not.
Let me put it this way. I'm hearing from big-time investors who think Microsoft's $30 per head to use the tool is going to have literally hundreds of millions of users within like a year. This isn't hype. They say like.
Right. So it's almost 2 o'clock. We still might get some fun, gang. So don't sit here and fall asleep. I just want y'all to know that I appreciate the likes and the subs.
And I think that explains the
Just so y'all know that. Y'all the real MVP, not me.
The story all year that Microsoft has been ahead of
Y'all the real MVP.
and coming up with monetization plans. But I'll quote our contributor Alex Kantrowitz, who is on.
Gotta watch this level. I may switch to one chart so I can kind of get a picture of what is going on, but I kind of also don't want to because I need it. Let's see. Take it off. Take it off. Take it off. Maybe I'll say that this weekend. Take it off.
Wrinkles there as well, but so
if you want to keep it on, that's fine. But why would you want to do that?
Yeah, maybe
you know what I mean? Anybody hear me out there? You feel me?
Google will do it cheaper. Keep in mind, they're an advertising company, not a software company necessarily. For now.
I don't know. I gotta make a change. I gotta make a change.
Still ahead, my next guest says Jay Powell has nailed it so far, but there is one.
Damn, that's crazy. It's giving me 1 minute for like 3 days. That's crazy.
Also, check out shares of SAP. They are slipping
and,
after posting an earnings miss and a revenue miss as well. This all happened midday, as you can see, just after noon Eastern time. It's a European company, recall. Shares are down 5%. They did see a jump in cloud revenue year-on-year, offsetting a decline in software licensing revenue. They hiked overall full-year guidance, but lowered the high end of that cloud revenue outlook, which helps explain the pressure you're seeing there. Worst day for the shares.
I gotta check on my cat. I gotta check on Abby, make sure she's all right. And then it's going to be 2 o'clock, and then we're going to think about losing some money. Who wants to lose some money? Raise your hand.
Welcome back to The Exchange. Today's surprise drop in jobless claims raising concerns that wage inflation could force the Fed to keep hiking. But my next guest says while he believes Chair Powell has nailed the fight against inflation so far, raising rates from here would be a mistake. Joining me now is David Zervos, Chief Market Strategist at Jefferies. You know why I love you, Dave? Because not many people come out and pound the table about how great and how right the Fed is. And you've been doing it for months, and you were right about after SVB. And I mean, I won't go on and on, but you know, I give you credit.
Thanks, Kelly. Although I'm not necessarily calling against the next rate hike. I certainly think they're hiking rates next week. I was just making a point in my last piece, which I think is what you were referencing, that, and I've made this point many times, and it's fallen on deaf ears, and I've been dead wrong about this one, which is I think they should be considering some asset sales, especially with long-term yields as low as they are, and mortgages tightening up as much, and the housing market so strong, even though we got a little bit of weakness.
But they might say, why do we need to do anything other than what we're doing? Because according to you, we've been masterful.
We have. I'm fully on board with the masterful idea, and I'm fully on board with another rate hike. And if we get a couple of 0.2s on the next core PCs and CPI, well, we'll get them in CPI. If we get them in CPI before the September meeting, I think they could pause for sure. If we get 0.3s on either one of them or above, I think they'll probably go again. But I guess I just throw it out there as, hey, if inflation doesn't come down as fast as they're thinking, if we're not getting down to 3.9 to 3.6 on core PC by the end of the year, why not consider the asset sales instead of another hike in September or another set of hikes? There's people out there that think they're going to go, to 6 or 6.5% before all said and done because they're not very optimistic inflation outlook. I just throw it out there because I think there's a lot of things that can destabilize in the front end, and the long end is just traded so well. It's giving them an opportunity to at least prep the market for it if it's needed. I don't think it'll be needed, but if it's needed, they should think about it.
People hate the balance sheet. The investors hate talking about it. People insist there's no correlation. I think the Fed hates it. I mean, they tried to shrink it in 2019. They saw the repo crisis. We say, well, with twice as big now, what could a little shrinking do? And I don't know. I think everyone's afraid of it.
You're right. I'm just, I've been pounding the table. Look, I used to write about this stuff back in, 2014, 15, when we were lifting off on, my belief that asset sales were a part of the program. So, look, I mean, we've had some good calls, we've had some bad calls. I certainly thought they would consider asset sales more aggressively. I don't think anybody wants to have these mortgages on the books. I think they just got kind of convinced by the big banks that raising rates was a little bit more was just a little bit more traditional and a little easier. And by the way, given what's happened with bank earnings in this latest round,
Bingo.
The banks have won the debate. They got what they wanted. Their NIM is really big.
No, it's exactly, and for anyone who missed it a couple months ago, I mean, you made this prescient call that you thought the reason why there wasn't more fallout from these rate hikes a la 1994 and Orange County's bankruptcy and all that is because it was all in the Fed. The Fed owns all the mortgage-backed securities. Who's going to take the losses when they own them all? So why would they sell them now? To your point, no, there would be no buyers. Mortgage rates would spike further. I mean, it'd be bad for everybody.
Well, let's play devil's advocate a little on that, Kelly. The current coupon mortgage right now is about a Fannie 5.5. They've got a few of those, not too many. They've got more 1.5s and 2s. But as I pointed out in my note last week, they've got about $300 to $400 million worth, $1 billion of high coupon mortgages. That's not a trivial amount. We did $600 billion in QE2. That was a big number. So letting $300 or $400 billion go instead of a couple of rate hikes, I think is worth talking about. And those are high coupon mortgages that all trade at $90 price. They're seasoned. That's paper that the market would love to get their hands on. So I think they could nuance this. But look, it's a fun debate. It really annoys a lot of clients because particularly mortgage clients. So I like to write about it and get people a little riled up in the summer.
All right, 2 o'clock countdown. Let's get it.
We've had, I think that's some nice calls on.
All right, let's do some work here, fellas, ladies, and frippin' gents. If anybody is here, let's go. Like, share, subscribe if you could. If you have not, I have to, as a human being, get over some of the things that I'm going through. It's just a bad day for me, for some odd reason. So what that means is I gotta do something that can make me happy and get my mind off of things. So that will be put in some work. All right, so let's go to an hourly chart on the SPY. Now, I don't expect the SPY, so let me just go to the Qs. Let me go to where I think weakness is and where the strength is. Instead of being a goddamn rookie that I don't want y'all to be. You guys don't need to be rookies. It's not rookie hour here, okay? We don't just waste money on stupid ass trades. We catch momentum like this. This is what we want, okay? You'll see? You'll see? You see the momentum? You see the sideways action? We selling. We not buying. Okay? What do I mean by selling? We selling premium. Sell them to the premium, okay? Alright, so. We are just... as much as I want to say it's trying to pick itself back up, I just feel like it's also falling. You still got lower highs being put in. So, expect some weakness, my friend. My friend. I worked with a guy once. Okay, he was Spanish. Alright, and he's a good friend of mine still, if I seen him. We've known each other for a while. I remember back in the day, he would, you know, we worked together, we got into a fight. Not really like a fight, but, you know, really pissed me off and stuff. But it's all good. But anyway, I left. I left this job for another one. Figure myself out, I guess. Anyway, so he would like call me all the time, bro. Hey, not bro, but hey, what you doing? You got it. I need you, man. I need you. These fucking guys, they don't know what they doing. Blah 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 blah. So anyway, he would always say that, my friend, and I always I talk like him sometimes for some odd reason. But anyway, I hope everyone out there is having a great day. I need to right now what I'm doing is I need to put in this work. Okay, we need to actually use the tools at our disposal to figure out what it is that we need to do to put ourselves on right probability, put this money to work, and put some change in our pocket. Okay, so let's do this. Boom, boom. Listen, the RSI on this and MACD. So, what could we get for power hour? Are we going to break this level and retest it? I'm so curious to find the hell out. I honestly think we could get. There's more of a chance for this thing to bounce than there is for this thing to break right now. That's how I feel personally. Alright,
TSMC,
so let me go to a half hour actually.
On its earnings report.
Wait,
As
who?
strong AI
Who?
demand has been, as strong as it's been and might be in the future, it just wasn't enough to offset current weakness. The company also delaying the start of its factory out in Arizona. All of this sending shares lower, and Christina Partsenevelis has the details.
Partsenevelis.
Hi, Tyler. Well,
Her
AI
name's
hype
always
can only go so far,
cracks
as you
me up a
alluded
little
to.
bit.
That's the message from TSMC management on their earnings call. They said that the short-term frenzy, yes, and they use those words, about AI demand definitely cannot be extrapolated for the long term. So
She always wears like bright colored dress up. That's like a crazy neon color.
Growth rate over the next 5 years. So we believe AI is going to grow. But what that tells us is that the AI market, which is literally just 6%.
I wonder what she did for a living before she went to see, because I think she's kind of new, I want to say. I think they just brought her on not too long ago. Maybe she's worked there for a while doing something else. I don't know. So who's going to take Joe's job? That's what I want to know in the morning. I wonder if I could be a runner-up in that. Alright. I think I know the markets pretty well. I love the markets. Not as much as I love my family. But not that I have a family, but I mean I have family, but like I don't have kids or anything. So
hurting the SMH, hurting stocks, hurting equipment makers like Lam,
I've always been wondering that because him and Becky are getting a little older. So what's that going to mean when they got to leave? Like what happens, you know? Still think it's a few years out, a few, you know, good years away, but How do you think about those things? Who are they going to put in? Are we going to like them? Are we not going to like them? Like, is there going to be both? Are we going to get a neutral view on things and not just one way?
Bodes well for Nvidia, but the PC
That's what worries
smartphone
me.
business continues to remain depressed, which doesn't bode well for the likes of Qualcomm, Intel.
It's the political
and that's
hour.
a much bigger
Becky's
percentage
in the
of
middle,
industry revenue.
literally, and she sits in the middle.
Christina,
And then you have what's
The
his
chip
name,
stocks
and
are
then
mostly
Joe.
down today in
I forget
sympathy with
what's
Taiwan
his
Semi's
name.
disappointing results,
I know
reporting
his name. I
first
just
quarterly
forget it.
profit decline in 4 years.
He
on weakening
just
demand
acts
for
like,
key
at least he
categories
acts like, I don't know if he
like
does,
smartphones.
but like
TSMC is a so-called
he is
foundry
more
that
like
makes
to the
chips for
left
other
side, I
giants
guess.
like Nvidia and AMD.
In some
Raises the
aspects, maybe he
question
is,
if
maybe he
AI
isn't. At least
optimism in
they,
the chip space
that's kind of
is
what they
overdone.
portray
Let's
on
ask Chris Queso, Wolf
on
Research's managing
CNBC's
director
morning
of
show.
Equity Research. Chris, it's good to see you. And, you know, I would say declines across the board. Not
They were
everybody
just
brought
talking
covers
about the
in.
Fed's balance sheet, and I've been
Thanks for
talking
having me.
about that.
So we rolled out coverage today at Wolf, and we've been positive on the sector since last October, and we're just reinitiating on it today. But you know what was previously said about
Okay,
the
so
sector
it's
still
so
being in a
oversold.
downturn
I'm
is
just really
absolutely
wondering
right.
if we're gonna be able to get a
We
bounce.
started to see the start of that downturn
Where are we at
since
on the
last
daily?
October. What's interesting from
Hold
semis
on.
as a
Where are we at on
as
the
a sector,
weekly?
however,
Where are we at
is,
on the
you know,
daily? Whoa,
semis
weekly
tend
is
to
so
bottom
oversold.
right on the first piece of
Hot
bad
dang.
news. So that's
So
why we
maybe
saw the
next
bottom of the
week
sector
we
last
have
October,
a
despite the
pullback.
fact that the inventory correction
Maybe next
continues
week
for a
is the
while.
pullback.
What we're optimistic
Doesn't
on
mean it
going
has
forward,
to, because they can
aside
just
from AI, and I anticipate you're going to ask me about
grind.
that too, is that the catalyst that the group has is eventually the customers stop burning through inventory. We think that happens through
What
the
is
second half of the year, and that's what
What
drives
is it?
the positive estimate revisions as you go into 2024, because you get a return to secular growth in a number of different areas, and then you stop burning inventory and you come back to normalized numbers.
GFVI?
How long do you think it
Gosh, dang! And I seen
Well,
this,
it depends
guys,
on
and
the
I was
sector.
gonna play
So, for
it.
example, handsets and PCs.
I was gonna
started
play
a little
this
bit
thing,
early
and
in
I
the inventory
didn't.
correction. Memory started early in the inventory correction as well.
Sorry to yell
so
into the
handset
mic
and PC, we think that works through in
again.
the second half of the year. Memory is going to take a little
Do
longer because
apologize,
there's
I
more,
really do.
more inventory
Alright, this
available
thing.
there. And then data centers started a little bit, a little bit later.
How did I
That's
miss
probably
it?
going to take all the way through the end
The
of
thing
this
is,
year.
I had the opportunity to
when it
catch it
pertains to data
here
center,
around
that's
lunch,
really
like before
where
lunch.
AI
It's like
is.
11,
It's a very
11:30.
powerful driver as you go into 2024.
Yeah, it was
because you
on
have
the
both
low
the cyclical
$5 mark.
benefit where the customers are buying less now because they're burning through inventory. In addition, data center CapEx spending is below trend line, and with AI spend, that's likely to get better next year. And on top of that, you get the secular benefit of AI across many of the semiconductor companies, and NVIDIA is the biggest one.
So, Chris, let me ask you specifically how important China is to this sector, China's recovery and comeback, and specifically to Taiwan Semiconductor. It feels like it is a big. If China doesn't,
I gotta get
come
something
back,
to eat.
this
I
whole
haven't eaten in
process
a
of
few
recovery is going
days.
to be slower than it otherwise would be.
Well, and I tend to agree with that. And some of the checks that we had coming into this earnings season, which, you know, for the device companies really kind of starts next week, is, you know, we found that China is pretty weak right now, and we think is weakened further over the last couple of months. That just kind of delays a bit of the recovery as compared to what you would have otherwise expected. But again, the buy signal for
I wonder where
semis
four
is
standard
generally when your
deviation
customers
is
are burning
on this.
inventory and you're shipping below what they're shipping out. We still think that's the case, even with some of the incremental weakness in China. We still think that sets up well for 2024.
Talk to us a little bit about AI and, you know, Taiwan Semi sort of using the word frenzy to describe it. Where are you on that? Is it overhyped? Is it a 2024, 2025 story more than a 2023 story? What?
I think AI is a next 5-year story, and we're in the very early innings of that. Of course, ChatGPT at the beginning of the year was what, you know, NVIDIA's CEO talked about as the iPhone moment for AI, and so we're in very
That's
early
pretty
days
big.
now. Now, the difference between TSMC and NVIDIA is
That's
that
pretty
TSMC
big.
gets paid on AI mainly on units.
That's
we
what
have
she
seen
said.
Improvement in units, but to the earlier comments, the magnitude of that isn't big enough to offset the cyclical downturn elsewhere, except for NVIDIA. And the difference for NVIDIA is that they're not only seeing the uptick in units, but they're seeing a very, very significant upturn in content and pricing. And that's because the what's going on in AI right now, and the NVIDIA solution, they can charge a higher price than the prior generation, which never before happened in semis, but give orders of magnitude improvement in performance. And the tagline from NVIDIA CEO is, the more you buy, the more you save. And the bottom line is, for NVIDIA and for several other places in the industry, revenue growth and ASP growth, ASP growth adds to revenue growth for the first time in the history of semiconductors.
It's kind of more.
Is it just me, or does that truck look small? I'm just wondering.
Go ahead.
It's a function of a slow
Trying to.
Moore's law, yes.
Maybe
Chris,
it's
thank
not.
you very much.
Maybe it's
Queso
kind of
on
big.
chips. We thank you.
I don't know why they would make it
Netflix
a triangle.
down nearly
That's what I'm trying to
10%.
figure out.
This
Why
was
is it a
after Apple
triangle?
report after the controversial password
I don't
sharing
understand.
crackdown. Many users online claimed they would ditch the service, mess around.
I mean,
and
I
find
guess
out.
for like
Looks
air
like
and
that
wind and
subscriber
stuff,
growth beat
but
expectations, but maybe not enough for investors to love it. Julia Borston here to discuss. Hi, Julia.
Hi, Tyler. That's right. I mean, it was just amazing to see the subscriber growth in the quarter. 6 million new subscribers versus the roughly 2
has
million
kind of like the
subscribers
back end of a
expected.
Lambo,
3 times the
like a
subscriber
Huracan or
growth
something, where it's just
anticipated. And
like
the company's also looking for stronger than expected
like-
subscriber growth in the third quarter. But what's notable here, Tyler, is
You know
that
what I mean?
revenue missed expectations, revenue guidance missed expectations. The combination of those two facts, what that means is that average revenue per user is not growing as fast as expected. It's actually in decline as more people sign up for these lower cost services.
Of course they do. They want Morgan Stanley to do that, but it's not Morgan Stanley's fault, you know. It's not their fault either.
Changes
But
in the fee structure are one thing, but am I hearing you sort of inferentially saying that the era when Netflix was sort of number one among one is no longer? In other words, now it may still be number one, but it's got a lot more folks nipping at its heels.
Well, yes, there's definitely more competition than there was, say, 5 years ago. But I think what's interesting here is Netflix has realized that it would rather have more subscribers and have each of those subscribers locked into some sort of subscription, even if it's a lower cost subscription, rather than have people just mooching off their friends and family. So I think that's another thing. They really want to make sure they have paid sharing rather than password sharing. They want to crack down on that password sharing. But I think another key thing here is Netflix did lay out the potential for advertising down the line. They're going to be converting some of these people who are using these lower cost subscription tiers into
all right, we're coming into it, guys. We had a nice down day.
means is that if you're watching Netflix on
We had a
advertising,
nice
they're
down
gonna be
day,
generating
guys.
A lot more revenue from you down the
Girls,
line than the people
ladies,
who were
gents.
paying for their lowest
Let's see if we
cost
get the
ad tier
bounce.
in the past. So they
Let's
are
see if
phasing
we
out
can get
that
the
lower
bounce.
cost,
What's the Dow
ad
doing?
tier. So I think they see a huge opportunity
the
for
Dow doing?
advertising coming up.
DIA.
They will generate billions of dollars in incremental revenue. And they're competing with many other players, whether it's Max from Warner Brothers Discovery or Disney Plus. But now they're not just competing for the subscribers, but also for those ad dollars.
For the ad dollars as well. Julia, thank you very much. Julia Borston reporting for us.
Coming up, another earnings laggard, Tesla. The share's also down 8%. Slimming margins, Cybertruck concerns among issues weighing on investors. We'll dive in next. Plus, striking a chord. Protests and union strikes breaking out across the country, causing a domino effect. We'll discuss when Power Lunch returns.
Whoa. That's some big thunder. Shat. I think we got a storm coming, guys. This is not cool, bruh. I'm getting scared. Let's see, guys. Ladies, gents. It's so weird. Just some random ass thunder. It was not dark out there. Yeah. It's right up. I think it's right above me. It's right on top of me. Holy no. No, 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 no. I don't want that. I don't want it to be right on top of me, bruh. So, where am I at? Motherfucking McCoy. Motherfucking McCoy. Yeah, let me go check and see what it looks like out there. This is cray cray.
Tesla posted all-time high quarterly revenue, but the shares of the electric vehicle maker are on the decline this day, down more than 7% on concerns of slimming margins and Cybertruck concerns. Still, our next guest is keeping a bullish outlook, raising his price target today from $270 a share to $300. He's Emmanuel Rosner, head auto and auto tech analyst with Deutsche Bank. Emmanuel, welcome. Good to have you with us. I'm always curious about how Wall Street reacts to earnings reports. And here's one where quarterly revenues were record. They were up 46% year over year. Profits beat estimates. And yet, the nitpickers sort of land on this stock in a heavy way. Why?
Hi, Tyler. Thanks for having me. I would say the quarter itself was fine. It was probably more than fine. The margins were probably a bit better than people expected. I think a lot of investors were hoping for Tesla to say, hey, this is the trough for margins. This is the end of the price cuts. And now things are looking up from here. And Tesla did not say that, but we didn't expect them to say that either. Tesla's message is essentially consistent with what they've been saying for the last couple of months, which is, this is a challenging environment. They will stay nimble with pricing.
Nailed those. So we nailed those. 31 cents right now for the 450. Tomorrow calls. Tomorrow calls 450. We nailed it. Look, I wrote you guys the entry. At least my entry. You know what I mean? Before it was there. Obviously.
Our view
it
is
doesn't
that
help
really
anyone
margins,
out.
But it could easily be a plateau margins here because prices will probably
It doesn't
come down
surprise
more,
me that
but
some
the
people would
costs seem
actually
to be
do
coming
that.
down quite a
Like,
bit
not
as
that
well.
I've
So
seen it.
certainly a little bit of an oversized reaction to
You know,
this, but
I don't know.
pricing will be the key discussion, for Tesla going forward.
And other competitors are talking about having to cut prices as well, as I understand it, because their vehicles are not selling as well as anticipated. Tesla does not seem to have that problem. They seem to be selling plenty of vehicles. To your point about prices and costs coming down, did I read in my note that Tesla has on the drawing board a vehicle that will come out in a year or two?
Curious to know if this level holds or
of
not.
Markedly lower price and still high capability.
That's exactly right, and that's really a key.
I wonder if we can get like a Bollinger Band or something with like a.
Tesla,
I
at
need
the same time
something.
as it's
I need
essentially
something for
optimizing
like
production and
the
maximizing volume
ATR.
of the current generation vehicle. Is also working on the next generation vehicle, which will start production most likely late 2024, early 2025. First in Mexico, but then globally. And the goal for this next generation vehicle is essentially to get the cost of goods sold to be half of the current vehicles. Essentially being able to bring vehicles that don't cost $40,000 to make, but cost only $20,000 to make. If they're successful with this, they would be able essentially to sell that in massive volume, grab a tremendous amount of market share, do it in a way where the competition wouldn't really be able to catch up, for a fairly long time, make very affordable electric vehicles and sell them in, profitably in very high volumes.
Yeah, but we've been hearing about this for years. I think there's no way it's 2025. We're already halfway through 2023. What if it's 2026 or 2027?
Yeah, I mean, look, Tesla has a pretty established track record at, missing some of the deadlines. They've actually not committed specifically to 2025. What they are doing, though, is they're already, breaking ground on the Mexican plant where it will start production. In Shanghai, they built, from break ground to start of production, it took them 9 months. I don't think they'll necessarily repeat that in Mexico, but even if it takes twice as long, we're talking about something that could, easily start production in early 2025. So this seems realistic, but again, could it be pushed out? Absolutely.
Let me give you a couple of tips that you're free to pass on to Elon the next time you see him. I think they need to refresh their line, and I think the truck is a part of that, and this new, more affordable thing would be a part of that as well. Here is and I own a Tesla. I've been transparent about that with everybody. They have so much of the sort of capital of the car invested in the touch screen, the big touch screen, that takes the place of the dashboard. It takes the place of gauges and so forth. I think they need to bring back the speedometer, the gas, the thing, and put it right in front of the driver's eyes. I think they rely too much on that touchscreen. I love the touchscreen. It's great. But I don't think, I've been in other makers' cars, and they did not go quite so heavily into the investment in the touchscreen. I think they need to have something that is more familiar for drivers.
Let me address your first point at the very least in terms of the refresh, because we jumped right away to the next-gen vehicle, which to your point is 2025, maybe later. But before that, there's likely going to be a Model 3 and a Model Y refresh. Some of it the Model 3 piece could come as soon as in the fourth quarter, starting from China, Model Y probably into next year. So they're very, very aware of this. And then the Cybertruck. The Cybertruck is a brand new vehicle, brand new segment for them. This is starting production now, and we'll start, real serious production in the fourth quarter of this year with the delivery event scheduled for this year. So this is a lot of like that freshness that you're looking for, and I think Tesla fully acknowledges. We're probably going to get that in the next 6 to 9 months or so, well before we have to, worry about the next-gen vehicle. I think the bull thesis is about the next-gen vehicle just because of the potential, how much of the market this could grab, how affordable this could be.
All right, I'll leave my tip with you there. You can share it with anybody. I've just shared it with our viewers, but rely a little less on the touchscreen, which is also a driver distraction from time to time. You have to look over and, where's my speed? Yeah. How's my speed going? Anyhow, Emmanuel, thank you for your insights. We'll have you back soon. Appreciate it.
Thank you.
I always give the side eye. No, maybe not to all the Teslas because there's so many. Every now and then I see a Rivian. I'm kind of like, maybe I'll stay over here away from it. Further ahead, exploring the fast food chain. Ahead of McDonald's earnings, what are we hearing from franchisees that could clue investors into the health of the company? Power Lunch is back in 2. Welcome back to Power Lunch. More evidence today of the impact higher mortgage rates is having on the housing market. Let's get to Diana Olick. Diana, what did we learn?
Well, sales of pre-owned homes dropped more than expected in June, Kelly, down over 3% from May and off 19% year over year. That's the slowest June pace in 14 years, or even back to the subprime mortgage days. But it's not all higher mortgage rates, more a lack of supply, which fell nearly 14% from a year ago. And that is keeping pressure on prices. The median price of a home sold in June was $410,200. That is the second highest price of all time. After cooling off for much of last year, prices started accelerating again this year, even as rates now hover around 7%, more than twice what they were just a year and a half ago. And of course, first-time buyers can't handle that, so they dropped out to just 27% from 30% a year ago. Historically, they should be 40% of the market. And all cash sales rose to 26% because as the market heats up, buyers need cash to be competitive. All this happening in the existing home market is, of course, benefiting the home builders. D.R. Horton beat expectations in its quarterly earnings report this morning and showed a 37% jump in new orders quarter to quarter, despite these high mortgage rates. Guys?
All right, thank you very much, Diana Olick. Well, in addition to the housing data, we also got initial jobless claims this morning. Rick Santelli has been mulling the numbers and with a look at how that data are playing out in the bond market today. Hi, Rick.
Yes, Tyler, initial and continuing claims once again well behaved, and the market paid attention. If you look at a 2-year or 10-year, we've traded up on yields all session. But there was other data today. Look at Philly Fed, 11 consecutive negative month-over-month changes. Leading economic indicators, 15 negative month-over-month changes. So there is a weakening here, and it does make sense, because the 2-year note yield is really somewhat hovering on Fed guidance in many respects. And how do we know this? All right, when was the CPI report? I know, it was July 12th. Well, let's start a few charts at July 12th. Well, if you look at a 2-year, it's basically come back and taken all the gains that it made on a cooler than expected CPI. But look at the longer dated treasuries. 10-year yields haven't quite come back. As a matter of fact, you can see it so clearly in 2s to 10s. We went from basically the low negative 80s to trading 100 today, minus 100. And that makes sense. If you look at a high yield for a 2-year today, it's at 487. Look for the high in a 10-year yield today, this is easy. 387, 100 basis points. And the reason this is so important is because as much as many want to say the Fed might have to continue to raise rates, as aggressive as the short end is until it closes above 5.07, the cycle high yield close, many are going to continue to fight it and look for more inversions in yield curves. Kelly, back to you.
Rick, thank you for highlighting that. We appreciate it. Turning now to oil, let's bring in, of course, Pippa Stevens. And, I mean, people are pointing this out, Pippa. You have maybe home prices feeling a little firmness lately, maybe oil, wheat has been, you know, so it's a little uncomfortable.
Yeah. I mean, well, wheat has been just absolutely rising on that, on Russia pulling out of that deal. But oil today not doing a whole lot, although sentiment has definitely gotten better. And I think one of the reasons why is because of those Russian seaborne exports. So I did want to take a little bit of a closer look at that. They did drop to a 6-month low in June. Now, part of that was thanks to refinery maintenance in Russia, which leads to production shut-ins. But what's key here is that so far in July, their exports are down to 3.1 million barrels per day, and the month is almost over. And that is well below the 3.9 million barrels per day in May. And so while it might not look that much on the chart, when also taken with Saudi Arabia's production cuts, it does start to bite on international prices. And so I think that is one of the things that is boosting sentiment here. However, there are still wild cards like India. They've been a key buyer of Russian oil, and they're currently in monsoon season, which does lead to lower demand. And then they go into refinery maintenance in September and October. So that could also be another reason why Russia's exports are down, although it does seem to be that they are starting now to comply with OPEC Plus coalition's pledge to reduce output.
I don't want to catch you off guard, and I know this isn't what you may have prepared for, but I read the stories, and I'm very concerned about what's going on in the Black Sea with the collapse of this grain deal and what that could mean for what I would call strategic foodstuffs, whether it's wheat, corn, barleys, other kinds of grains.
Yeah. I mean, it's definitely concerning, particularly with El Nino and the other strange weather patterns, you know, fueled by climate change that we're seeing right now. But I think as it relates to oil and gas prices, it does add another layer of uncertainty and shows that Russia is still playing its card. They do still have ways that they can bite international markets, whether it be for soft commodities or oil and gas or even uranium. They are a key enricher of uranium. And so while it seems like some of the initial spike in prices after they first invaded Ukraine has subsided, they do still have levers that they can pull.
Yeah, I mean, it gets very, very dangerous very quickly there. If Russia sinks some commercial grain-carrying ships, it will be a difficult day.
And we've had a bad harvest here, I think, in the U.S.
I don't know enough to know, but
weather.
But yeah, I think that
playing a role again.
Yeah, the heat ain't helping, I'm sure.
And all of these markets are now international, and so if
Yeah.
there's an issue in one, you'll see it in other areas as well.
Pippa, thanks. All right, let's get to Seema Modi now for a CNBC News update. Hi, Seema.
Tyler, good afternoon. A new era could begin any moment for Washington football. NFL owners are meeting right now in Minneapolis to vote on the sale of the Commanders. If approved as expected, the team would change hands from longtime scandal-plagued owner Daniel Snyder to Josh Harris, owner of the Philadelphia 76ers and the New Jersey Devils. The record-setting $6 billion sale could close as soon as tomorrow. Pilots may have to wait a little bit longer to start their retirement. The House passing legislation today that reauthorizes the FAA for the next 5 years. The bill includes a provision that pushes the retirement age for pilots from 65 to 67, and it comes as the U.S. deals with a severe pilot shortage, the measure now heading to the Senate. And get this, Microsoft rolling out new beauty filters for people rolling out of bed and getting on video calls. The new AI-powered feature will offer 12 makeup looks inspired by Maybelline products. The beauty app is available on Microsoft Teams for enterprise customers. So Tyler and Kelly, no need to disable your webcam next time you roll out of bed and haven't put makeup on. Now you got
I'm
AI.
saved.
I love it. I love it.
This changes everything.
Yeah, that's right.
It could.
Fix my hair right there.
I love it.
Thanks, Seema. And ahead on Power Lunch, workers striking a big blow to big business. Union disputes are sometimes necessary for workers and an expected risk for companies from time to time. But while usually few and far between, there does seem to be a fire sparking across the country. We'll discuss the growing labor protests when Power Lunch returns.
8555.
All right, welcome back to Power Lunch. Call it the summer of discontent with an analogy to King Richard there. Prices for a lot of things are still high, and workers feel wages are just not keeping up. As a result, hundreds of thousands of workers across the country and north of the border in Canada in very different industries are either on strike or threatening to. Hollywood feeling the pain. 20,000 writers are off the job, 160,000 actors on strike. This, of course, impacting all of the major media companies. More than 7,000 Canadian dock workers, meanwhile, and warehouse people as well, also on the picket line, impacting trucking and rail companies, and the Teamsters, the union that represents UPS drivers and employees, also threatening to walk out. That would involve 340,000 workers. Here with more on what's really causing these labor pains and what companies can do is Steve Odland, President and CEO of the Conference Board and a CNBC contributor, and Michael Strain is Director of the Economic Policy Studies at the American Enterprise Institute. Michael, let me start with you. Why so many strikes right now? Obviously, each, and potential ones, obviously each have their own particular causes and reasons, but is there a theme?
I think there is a common theme, or at least a common underlying cause. The combination of the pandemic ending, of all the fiscal policy support for the economy during the time of the pandemic, of really loose monetary policy, has led to a situation where economic demand just far outpaces economic supply. That has led to consumer price inflation, higher than we've seen in 4 decades. That itself is a big driver of this discontent. Everything's more expensive. Workers want higher salaries, higher wages in order to kind of keep their standard of living, in order to deal with all these high prices. In addition, that big demand boost that we have seen has led to a really tight labor market. We have had months where there are 2 job openings for every 1 unemployed worker. That gives workers a lot of bargaining power. They can tell people who want to hire them, businesses who want to hire them, they can walk into their boss's office and they can demand higher pay, and they know that they're in a stronger negotiating position because it's so much harder for managers to get workers. And so I think those are the 2 big things. Higher prices, people want higher salaries and higher wages to deal with them, and workers know that they're in the driver's seat in negotiations in a way that is typically not the case.
Yeah. Steve, let me get you to react to what Michael just laid out there. He gave a couple of reasons why there is this labor, let's call it discontent right now. Do you see it that way, and how do you react?
Yeah, I think Michael's absolutely correct. You're in a historic period here where you're at almost full employment, 10 million job openings, and wages have not been keeping up with the rising prices. Now, the Fed's moved pretty significantly, over 500 basis points, probably 1 or 2 more moves to happen. But the Conference Board's leading economic indicators are declining, and that's been going on now, but it's signaling a recession here. We're projecting a short and mild recession by the end of the year. So there is this window of time where employees have the power, but as the economy slows and as we potentially go into a recession, that should ease up, and that period of time where they have that power should go away. Now, there are some other things in here, like the pilot shortage. We're coming out of the pandemic where we shut everything down, people took retirements, and now we've got this historic shortage of pilots. So there are some policy issues that have been taken, as Michael said, that have led to unique things around these various industries.
So you, Steve, this is interesting to me because I've also been a little curious about the dynamic here. You think people are doing it as kind of a last opportunity before they sense the window closing if the economy and the labor market weaken?
I think that's right. That nobody knows for sure what's going to happen, but historically, as the economy has gone into recession, a lot of jobs have been lost. Now, this recession is projected to be mild and short, and the projected job losses are only, I say that with brackets, but only about 1 million jobs, which is a lot for those 1 million people that are impacted. But in other words, it should be weakening, and therefore the power of the employees is maximized right during this period before that slowdown happens.
So, Michael, would you agree with that? That, because I guess the other way to look at it would be to say, no, that the labor market is stronger than expected, and the jobless claims data this morning, proved that, and workers sense that even more than maybe the macroeconomists.
I think that two things are happening. So I think if you kind of take a wide angle view and look at the economy over the last year, over the last 18 months, I think there's no question but that the labor market is slowing. There's no question but that we're seeing progress in consumer price inflation. I think if you look at the economy over the last 3 or 4 months, we haven't made a lot of progress in the labor market. Over the last 6 months, haven't made a lot of progress in inflation. And so a lot of it really just kind of depends on what time frame you're looking at. I continue to believe the economy is trending toward a recession. I think we're going to see a recession. And I think when that happens, when the unemployment rate starts to go up, then I think workers are going to lose a lot of bargaining power, again, because they know they're hard to replace. They know that their manager is having a really hard time finding other workers, finding people to fill job vacancies.
In that sense, you sort of agree with Steve. I want to come back, Michael, and then maybe Steve, you can react as well. I was speaking to an executive who works for a major consumer products company last week, and she said, "Yeah, I hear these stories about there being 2 openings for every worker available, but not where I live, not in my industry, certainly not in the tech industry where all they've been doing lately is laying people off." So I wonder if you scratch the surface of that widely cited statistic, which I'm sure is accurate, in other words, that there are 2 openings for every worker available, that if you dug down into the trench there, you might find something that yields a different picture of the labor market. Michael, why don't you go first?
Well, I think that's right, and I think it depends on the industry you look at. So that statistic refers to the labor market as a whole, the economy as a whole. At large, yes. So the tech sector has been engaged in layoffs. I think the observation about the pilots is a good one. The issue there is in part strong demand on the part of households who want to get on an airplane and take a vacation. They're also having trouble because a whole bunch of their pilots took early retirement, and it's hard to train new pilots. And so, each of these situations has its own idiosyncrasies and its own specific circumstances, and different industries of the economy are different. A common theme is everything's more expensive when people go to the grocery store or when people want to go shopping, and workers are, apart from certain industries, workers just have a lot more bargaining power with managers and with prospective potential employers.
Steve, final thought from you, please.
Yeah, it depends on what happened in the recession by industry and by company. Those consumer products companies, the non-cyclical companies that didn't get impacted heavily, are pretty much more level. The ones that were shut down and impacted, of course, then had to come back. You see that in airlines. The tech industry is completely different. We had to go completely virtual. They ramped up. Amazon has nearly doubled the size of their business since the pre-pandemic period. Went too far, the curves come down. So you see these variations by industry, but the macro numbers suggest that the time is now for workers, and that will be different a year from now.
All right, Steve Odland, Michael Strain, thank you very much. We appreciate your time today.
Thank you.
Thank you.
Survey says they're loving it. Coming up, why McDonald's franchise owners are optimistic ahead of the company's earnings next week. Power Lunch will be right back. Welcome back. McDonald's is set to report results next week. The industry can be a little hard to read considering all the factors at play right now between inflation, consumer spending changes, and more. But a new survey of the company's franchisees could shine some light on what investors can expect. And Kate Rogers is here with more. They sound pretty optimistic, Kate.
Kelly, that's right. Kalinowski Equity Research is out with its two-part survey of McDonald's franchisees, pointing to strong sales trends in the U.S. in the quarter, thanks to some promotions like the return of Grimace and some trade down from higher-priced competitors as inflation remains stubborn. The analyst is projecting U.S. same-store sales up 10.3% in the quarter. As a result of that, now owners responded that pricing strategies are working well, employment is full in some locations, and tourism is helping to boost some sales. Of note, franchisees reported some improvement in the relationship with corporate at 1.71 out of 5. That's the highest level in nearly 2 years. But the 6-month business outlook was at 2.29 out of 5. That's the lowest level in nearly a year. Remember, there's been some ongoing tensions between the owners and corporate over a restaurant grading system and changes to franchise ownership agreements that were announced last year. The survey is of about 20 owners representing around 200 locations, so it's a subset of the McDonald's footprint here. McDonald's has been a favored name in this environment of high inflation and potential consumer pullback or trade down, as it's performed well in previous recessions. Year to date, it's up around 12%, better than names like Wendy's and Yum, but being outperformed by fast food competitors, Restaurant Brands International and Shake Shack, which has been on an absolute tear year to date. Back over to you.
You know, I mean, I'm glad to hear that, the tone is pretty positive, but all the buzz is about this $18, Tyler, Big Mac combo meal at a rest stop in Darien, Connecticut. What does that tell you, Kate?
Well, Kelly, listen, all I can say is the restaurant can guide on prices. The owners, the franchisees set the prices, right? That is quite high. I don't have to tell you that. McDonald's has really kind of maintained lower prices than a lot of competitors. And again, that's why it's been one favored name in this environment for people who might be trading down from higher price competitors like a Chipotle, which can be a little bit more expensive of a meal. $18 is a little closer to that and a little less aligned with what the McDonald's pricing typically looks like.
A lot of hungry people in Darien, I guess.
They know they got you at those rest stops.
Yeah.
They know it.
Yeah.
All right.
There it is.
Thanks, Kate. All right, coming up, trading the consumer. J&J, American Airlines, Discover Financial, all moving on earnings results. We'll get the trade on each of them in 3-stock lunch when we come back.
Carvana.com.
Time for today's three-stock lunch. Taking a look at some big earnings movers today, starting with an outperformer. That will be Johnson & Johnson, up nearly 6% on the session. The company posting a big beat and raising guidance. Also, the first quarterly report for their consumer spin-off, Kenvue, which they hold a 90% stake in. Here with our trades, Nancy Tengler, Laffer Tengler Investments CEO. What do you think of J&J, Nancy?
Tyler, good afternoon. It is a member of our 12 Best Ideas portfolio. It's a stock that we would tell our clients you can own for a lifetime. And so we've greeted the Kenvue spin-out with great enthusiasm because the company bought Actelion, which is a biotech company, was the largest transaction, and it made them the largest biotech company. This was a number of years ago, and they never got credit for it. And so in this quarter, what we see is that pharma and med tech contributed materially to outperformance. They beat and raised. You're getting paid at 2.8% dividend yield, 6% growth on a trailing 5-year basis, and free cash flow is expected to grow at 30% this year. So we love the name. I think you continue to buy it, reinvest your dividends, own it for the long term.
For the long term, Nancy. And what about American Airlines, down 6% today after that record revenue in the quarter earnings beat, but their Q3 guidance more in line, whereas United's was much stronger than expected. American, by the way, also has the looming negotiation with their pilots union, probably another overhang on the stock.
That's it, I think, Kelly. First, my disclaimer is your viewers should not listen to me on airlines because I almost never own them. They're just too cyclical. There's too many inputs that they have no control over, demand, of course, and energy prices. But I think the pilot negotiations, it will take $8 billion out of the top line or out of the bottom line. And I think that's one issue. And then you've got the fact that they lowered guidance. That's another issue. And then there's some serious customer service relations problems. I don't know if you caught the story where they're telling people that the bins are full so they can get out on time. And then people open the bins and they're not full. So that's creating a lot of discontent.
Yeah, you don't want to be lied to. You don't want to be, messed with, even if it does get you where you're going a little quicker.
And finally, we end with Discover Financial, Nancy, plunging today on a flood of bad headlines. The company missing on earnings, pausing its share buyback program, undergoing an audit and regulatory review for issues stemming from credit cards that date all the way back to 2007. A troubled stock today, but what do you say?
Well, I say if you own it, you may not want to bail out here because what's happened is, everybody's running for the exits and it will settle eventually. You are getting paid 2.7% dividend yield. They've grown it around 13%. But free cash flow is cut in half this year over last year. I definitely don't think you buy it if you don't own it already. We like American Express and Visa much better, higher end quality companies, higher end consumer. I think that's where you want to play this particular segment. I wouldn't chase DFS on the way down.
Right. Interesting. Thank you very much, Nancy. Nancy Tengler, always good to see you.
You too. Thanks.
Coming up, try your hand at a new way to pay. The technology coming to all Whole Foods stores. That's right at your fingertips. All the details coming up in Powerline closing time right after this. And as we head to a break, look at the NASDAQ, down nearly 2% now, so we're pretty much at session lows. Tesla and Netflix continue to be big drags. Those poor results from SAP midway through the session didn't help either. We're back after this.
Carvana.com.
All right, a little less than 3 minutes left in our program. Bunch more stories we want to tell you about, so let's get right to it. Starting with the Alzheimer's drug that could raise your Medicare premiums. Leqembi could add $5 a month to Medicare Part B premiums, according to the Senior Citizens League. The drug made by Eisai was recently approved by the FDA and therefore added to Medicare coverage. There are lots of drugs like this, either like this one or in the pipeline, that seniors may want to take that are going to be very expensive medicines, at least at first.
You only hope that, listen, you know, a $10 per month increase will, both for this and for weight loss, will the sort of the good it will do in lessening future medical treatment kind of offset the near-term price.
That's a very good point.
Yeah, I mean, you hope. Well, it'll take a while to see. Meantime, a cold reality if you're buying frozen veggies. The prices of frozen vegetables are up almost 20% over the past year, according to the June CPI data. That's nearly 6 times the average for all consumer goods and services. The spike can be blamed on heavy rains in California, which has ruined crop yields, rising costs for labor and cold storage, and even ripple effects from the war in Ukraine.
Yeah, that's an unexpected one. We've heard about bread, we've heard about eggs being much more expensive, beef, chicken, poultry, but frozen veggies.
Are you a big consumer of frozen veggies?
Actually, I find them very convenient. Particularly, I like frozen peas, which can double as a great applique if you sprain an ankle.
That's the reason I have
That's why you have the frozen peas, yeah. All right, Walmart cutting the price of its Walmart Plus for lower income households. Those Americans who receive food stamps, other government assistance, they're going to get the service for half price. Amazon has had a similar discount for Prime for some time. Here is another way to expand market, but also to invite people who might find the full price a little too much.
It just makes sense. I think we'll see more and more of this as well, kind of this multi-tiered pricing of things, whether it's streaming or these other kinds of memberships. And finally, Amazon says it will bring pay by palm technology to all Whole Food stores by the end of the year. Amazon One lets customers pay for items by swiping their hand over a kiosk. They say they're seeing growing demand for the tech, which launched in 2020. Panera started testing some stores earlier this year. Coors Field, home of the Colorado Rockies, has started letting fans use palm payments to buy beer. So people out there, and tell me if you've used this, does it speed things up? Because my current Whole Foods checkout is a nightmare.
Yeah, it seems like a cool thing. I use Clear at the airport, but I have to use my thumbprints, and it does take a little while, but we'll see. Maybe it'll work.
I like the facial rec, on my phone. Yeah. I was a hater of that until I started using it. It's pretty good.
Hey, thanks for watching Power Lunch, everybody.
Closing Bell starts right now.
Kelly, thanks. Welcome to Closing Bell. I'm Scott Wapner, Post 9 here at the New York Stock Exchange. This make or break hour begins with the surging Dow. Heading for its 9th day in a row of gains, it raises the question now of whether sectors that were lagging will soon be leading. We'll ask Ed Yardeni in just a moment. He remains bullish on the market, and he is here at Post 9 at the New York Stock Exchange. In the meantime, your scorecard with 60 minutes to go in regulation. Healthcare, energy, industrials among the best areas today. Names like J&J, IBM, Boeing, and the banks leading the Dow's continued rise. There you go, green across the board there. Down day for the NASDAQ, Tesla, Netflix, a midday miss from SAP, dragging tech a bit. There's SAP, the bottom of your screen, down near 7%. We are near the highest levels across the board, still, though, on the major averages since early 2022. And it takes us to our talk of the tape, the rally itself, and why Ed Yardeni says it has staying power. He joins me, as I said, here at the Stock Exchange. Welcome back. It's been a minute since before COVID, you said, since you've been in the building.
So, yes.
Well, it's good to have you here in person.
My pleasure indeed.
So why do you think this has staying power?
Well, I think that we're not going to have a recession. We've had sort of a rolling recession hitting different industries in different times. We've talked about it before. I think it's going to roll into the commercial real estate market, but I don't think that's going to take the economy down. Meanwhile, the consumers, they're starting to see their wages going up in real terms, inflation adjusted. We'll see how the strikes pan out, but all in all, the outlook for real wages is really quite good for the consumer.
All right, so let's talk valuation.
Sure.
Tell me why the valuation now in the S&P, which is above its historical average, makes sense.
Well, the historical average is 15, right, for just about every measure of macro valuation.
Where are we at now? Like 19, right?
We're at 19 and a half.
Okay.
And of that, something like the mega cap 8 stocks, which account for now 27% of the S&P 500, they've got a multiple of 30. So they got down to 20, now they're at 30. People are willing to pay for those kind of companies, and they're not going away. These are not the kind of stocks that kind of imploded in the tech wreck of 1999, 2000. These are real companies that are making a lot of money. And so I think they're going to remain large, and so I think we have to account for that in the valuation calculations.
So when someone says the market's just too rich overall relative to where earnings are and relative to where the economy is, yes, the economy hasn't rolled into a recession, as you said, but nonetheless, when someone says that, what's your pushback?
Well, my pushback is that the market doesn't discount where earnings are today. It discounts where earnings will be over the next 12 months. And the analysts are already giving us estimates for next year. The market is starting to look a year ahead. And so much depends on the economy. I think the economy is going to be such that earnings this year will be 225, and there's a lot lower numbers for this year out there. And then I think next year is 250, and the year after that I think it's 270. So I could just on those numbers with a valuation multiple, if you'll excuse me, giving you 20, instead of 15, taking account of the mega cap 8 impact. Then I think we could see the market continue to move higher.
Some people would suggest it's just too early to sound the all clear, and you have some very lofty earnings projections. Those are big.
Yeah, I'm not sounding the all clear. I'm not saying there aren't any risks. I think, I guess I'm in the same camp as the Goldman economists are. We're talking about 75% likelihood that we'll not have a recession and 25% risk of a recession. So we're not, I don't think there are any of the recession forecasters, any of the no recession forecasters are predicting that it's not going to happen at all. So I'm on the watch out for it.
But it's like a de facto all clear in some respects if you think that earnings are really going to be that high.
Well,
you can't have one without the other.
No, I know. Look, basically I started giving the all clear in late October of last year. I thought that October 12th was the low. We've had a great rally since then. But that was then, and as you said, this is now. And as we look forward here, my opinion is that the economy is going to do surprisingly well, and so will earnings.
So today is a good kind of example of the broadening of the market a bit.
Correct.
Obviously, tech is pulling back a bit today, and you've had these lagging sectors do well of late. Things like transports are at highs. The banks have finally woken up, and some of those more cyclical areas. Is that staying power there, do you think?
Yeah,
is the catch-up trade going to work?
Well, I think it reflects the underlying fundamentals. I'm a fundamentalist. I do realize that some of the technicals are looking as though the market needs a correction. But from a fundamental perspective, the financials are doing well because we had a financial crisis in March, and that dissipated pretty quickly. The Fed dealt with it, and the banks are reporting decent earnings. Then with regards to the industrials, this is the first time we've ever really had fiscal stimulus before a recession, which is one of the reasons we're not getting a recession. Usually fiscal stimulus cuts taxes or increased spending after the recession has already occurred. This time around, there's so much spending coming from the government, and a lot of that is going to benefit the infrastructure companies.
So it's different this time?
Well, I think fiscal policy is different this time. I think just empirically, it's amazing to see the Fed funds rate up 500 basis points, and the economy is still doing well. I mean, even I'll concede that. But then again, the economy's been resilient, and I think it remains resilient.
I guess in other words, when I suggest that, or ask you if it's different this time, meaning you are at such a level of strength and stimulus going in that maybe it was different on the front and it's different in the back.
It could be. It definitely could be. I mean, there's still, Jamie Dimon's still talking about when consumers run out of excess savings, that the consumer is going to retrench. And if the consumer retrenches, then we're going to have an economy-wide recession. So I'm very aware of that. I think we're all aware of that. But I don't think that's going to take the economy down.
But you also must not think it's going to happen. You can be aware of it. But, I mean, if 2/3 of the economy rolls, then you got a problem.
Yeah, exactly. I think there's offsets. And I think the offsets is the labor market remains tight. I think that wages are going to continue to rise faster than prices. And baby boomers like myself, 75 million of us put together net worth of $75 trillion. And a lot of my friends are retiring. I'm not. But what do they do all day? They spend money. So there's a lot of that going on.
So what do you make of what's taken place in tech that make you any bit nervous about? You think those those valuations are justified?
Yeah, well,
the multiple expansion we've seen there.
I started out the decade talking about the 2020s as being the roaring 2020s, and it didn't take very long for that to look totally delusional. We had the pandemic. We had, the economy getting hit, then doing better. I'm feeling pretty good about that outlook for the rest of the decade. I think technology is going to make a huge difference to productivity. Technology solves problems, and the biggest problem we have now is a labor shortage. And I think it'll solve that problem. Productivity increases. That's good for profit margins. It's good for real wages. It's a win-win situation.
So if we can get, you said you think the S&P can see 5,400 by the end of next year, and 5,800 by the end of 25.
Right.
And you think it's technology that's going to drive it towards those lofty numbers?
I think technology will be part of the story, but I think every company has to become a technology company. In other words, even if they don't make the technology, they have to use the technology to improve the efficiency of what they do. And so I think technology becomes a very big factor for the economy overall.
Is there an area of the market you just don't like at all?
Well, at this point, I'm not too crazy about consumer staples because I think the economy is doing better, and they're not exactly cheap. Utilities are basically bond surrogates, and so I can't get too excited about them because I think bonds are just going to stay here for a long time. But healthcare has been an underperformer, and
Yeah, it sure has.
Yeah, I think it's due for a bit of a run. Financials have been underperformers; they're due for a run. So I think it's going to broaden out.
All right, let's bring in Stephanie Link, CNBC contributor of Hightower, to join the conversation. You heard, Steph, it's nice to see you, what Ed had to say here, that this has staying power. You agree?
I do. I actually agree with Ed on almost everything he just said. You were just talking about the consumer, and we can cite a lot of the various government data that we get, but I'm going to tell you the company's data and the company commentary, especially the banks, suggest that the consumer is just fine. You heard Synchrony Financial talk about how strong the consumer is, and they're vulnerable given their mix. You had PNC just yesterday saying the same thing. You have JP Morgan grew credit card loans at 18%. You had Wells Fargo grow credit card loans of 13%. Both of them talked about not only the consumer being strong, but small and medium-sized businesses. So I'm going to listen to what the companies have to say. And then I look at the Fed's financial accounts in the first quarter, as of the first quarter, plus the current asset prices. And the household sector wealth is at $157 trillion. There's a lot of tailwinds to the consumer, and Ed hit it perfectly on the job market. And initial claims today is far from recessionary and really very strong with a lot of momentum. So the consumer we talk a lot about, because you said it before, 2/3 of our economy is the consumer, so we're rooting for them. I also think the manufacturing side of the economy is bottoming. I think the PMIs are kind of basing, and I think even the regional data, it's kind of still stinks, but it's getting less bad. And so I do think that the reshoring, onshoring theme and electrification theme and energy transition theme are very much tailwinds for the manufacturing sector over the long term.
You mentioned positive commentary on what the companies are saying, and that's what you're listening to. But what about what SAP had to say today as they lower their cloud revenue forecast because of slowing demand, and it's taken a lot of the cloud software names down? And these stocks, along with chip stocks and some of the other areas of tech outside of the Magnificent Seven, have done incredibly well. Some might argue a little too well.
They have done too well. You know, I'm underweight the group. But there are pockets within technology that are still very attractive. I don't think AI is a flash in the pan. McKinsey has a $4.4 trillion total addressable market by 2030 for AI. So maybe the AI stocks are ahead of themselves, but that's going to be a great theme. Cloud is not going away anywhere. I know you may want to talk about IBM, but Red Hat grew 11% in the quarter for IBM. That's very nice growth. It might be slowing from the mid-teens that we saw, but it's still very healthy, and it's a $1 trillion total addressable market by the end of the decade. And we talk about cybersecurity all the time, and that's probably my favorite sector, subsector within tech. Those stocks are not cheap by any means, but that doesn't mean you have to buy them here. You wait if you get a pullback, because the growth at the end of the day is so substantial.
Ed, why aren't we more worried about what's happening, or maybe better said, not happening over in China? It used to be that, you know, China catches a cold, the world gets sick. Now, China's recovery hasn't been anything close to what people expected it would be. I mean, in part, commodities and some of the weakness there have been reflective of that. Why doesn't the market care?
Well, I think what the market is focusing on is that China's economic weakness is translated into deflationary prices over there. The PPI is down like 5% on a year-over-year basis. The CPI is 0, and there's actually a pretty decent correlation between the PPI in China and the PPI in the United States, and I think we saw a surprisingly low inflation rate for the PPI in the latest numbers. So a slower Chinese economy has kept a lid on inflation on a global basis in terms of copper prices, in terms of oil prices, and the market is focusing right now on inflation, and better than expected news in that regard is better than expected news.
Yeah, I guess inflation news better than expected trumps almost everything now. But Steph, you bought more Las Vegas Sands this morning. This is sort of one of those in the wheelhouse of China fears, worries about Macau and what's happening there or not.
Yeah, and Las Vegas Sands is really more the consumer and Macau is just about to hit its stride. They grew market share 30% in the quarter, and yet they had 13% of their rooms are out of service, and you only had 50% of airport volume. So just imagine when those things actually improve. And Macau GGR, gross gaming revenues, is up 97% from 2019, but I think that you're still going to see material upside as you have kind of their economy on the consumer side normalize. Now back on just overall China, I will tell you, I own Freeport-McMoRan, and they actually said on the conference call today that China, their results in China are a lot stronger than what the headlines and what the commentary is out from kind of other parts, other data points. So I thought that was kind of an interesting comment from them. We haven't heard that yet. Let's wait until we get some of the industrial companies to hear what they have to say about China. But I'm in the camp. I like China. I like the reopening, but it's the consumer side that I like.
Yeah, Ed, I'm looking at areas of the market that have been doing well. Right. Let's say in the last month, which are more tied to our economy here.
Right.
Things like small caps. Russell 2000 is up 5.3% in
Makes
1
sense.
month.
Yep.
Financials, the XLF is up near 7%. These trades, what do you think about
They make
small
a lot of
caps,
sense.
mid caps, things that are more economically sensitive, generally lead you in on the way down, lead you out on the way back?
Well, usually the mid caps, the small and mid cap stocks do quite badly when investors are worried about a recession. Now, as people are getting more comfortable that maybe that's just not going to happen, we're seeing them starting to outperform. And we were talking about valuation before. They're very, very cheap compared to the S&P 500. We're talking about 13, 14 forward PEs. And so there are definitely opportunities there, but they're moving. They're moving fast. The industrial small cap, mid caps are at all-time record highs.
Steph, do you think the banks have bottomed, these bank stocks? Because the stock reaction has been, I think, quite interesting. The last few quarters that these companies have reported, the stocks have not performed all that well. And now, even with results that in some cases would be deemed mixed, the stocks have largely reacted well.
Yeah, well, I mean, the expectations were really low. The sector has lagged all year pretty much. The valuations, some of these big banks, I mean, they got below book value. I mean, Bank of America 0.9 times book. Even JP Morgan 1.5 times book. It's usually over 2 times book. So the valuations have come down substantially. Capital levels are very strong. And they're going to continue to benefit from net interest income being higher because of the yield curve. Net interest margins are going to hurt, but I think they're more than offsetting that with the higher NII, net interest income. Expenses are coming down. And oh, by the way, I think we talked about this on halftime the other day. Morgan Stanley's CEO talking about investment banking capital markets having already bottomed 4 to 6 weeks ago. If you really believe that, and you know I do, then you want to own the capital markets exposed banks. Morgan Stanley, Goldman Sachs. Look at Goldman Sachs, terrible quarter, but the stock's up since then. Look at even Bank of America, they're gaining market share. So yeah, I think there are certain pockets within financials that have bottomed, or at the very least have more upside to go from here.
We've kind of, Ed, I'll give you the last word. We've kind of written off the Fed as a risk. The market doesn't really seem to care. It assumes that in a week or so, the Fed's going to raise again. And even if it goes in September, the market doesn't seem all that concerned. Is that the biggest risk, underestimating what still might happen with policy?
I see your point, but I don't necessarily, I'm not particularly concerned that the Fed's suddenly going to become a big issue for the market. I think the market has seen, as I said, the 500 basis point increase in the Fed funds rate, and the economy is resilient. Another 50 basis points isn't going to make much of a difference to the overall economy.
We'll leave it there. It's good to see you back in person. That's
you.
Ed Yardeni. Steph, you'll be joining us a little later in the market zone as well. We look forward to that. That's Stephanie Link. Let's get to our Twitter question of the day. Which lagging sector of the market is about to have a big catch-up trade? Is it healthcare, energy, or financials? Head to @CNBC Closing Bell on Twitter to vote. We got the results coming a little later on in our, we're just getting started, though. Up next, the drop in Tesla shares dragging down the NASDAQ 100 as comments from the company's earnings call overshadow record revenue. But EMJ's Eric Jackson is staying bullish. He joins us to make his case for sticking with that stock while the bears have it all wrong. He also owns Netflix. We'll find out if he's doing anything with that position. Shares are down today more than 8%. It's a drag on the Nas. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC. We're back. Tesla and Netflix dragging the NASDAQ down in today's session. Both stocks down more than 8% post-earnings. There's your look right there. Tesla's down 10% right now. My next guest, who owns both names, says he is still bullish on both stocks and tech overall. Let's bring in EMJ's Eric Jackson, EMJ Capital. It's good to see you again. Welcome.
Hey, you too, Scott.
So let's take Tesla. Your reaction to a stock that's down 10%?
Stock's had an enormous run. My AI and ML driven model got long Tesla back in early May at 168. a stock touched 300, I think, a day or two ago. We've given something back here today, but we're basically back to what, beginning of the week or the end of last week. So I think it's a blip. Same thing with Netflix. Both conference calls were really strong. Things are heading in the right direction. Both were better than feared. And in my opinion, the key metrics for both companies are moving in the right direction.
So you don't care about a lack of, or at least the fact that Musk seems intent on putting growth over profitability at this particular time. That doesn't bother you at all?
He's playing from a position of strength. And so, all the bears on Tesla all year have been decrying how these price cuts are a sign that nobody wants these cars anymore, and that the bottom's going to fall out and gross margins are going to go through the floor. We got better than feared gross margins at 18.1%. I'd like to see the gross margins of Ford and GM for their electric vehicles after Ford's just done the first of probably many price cuts to their Lightning machine. The fixed costs or the labor costs that Tesla operates at compared to the U.S. competitors, there's no contest. Elon knows that, and he's taking advantage of that. He's going to build market share over these next few years. And what's the Fords and the GMs of the world going to do in comparison? They're going to lose a lot of money.
So you, in terms of Netflix, so you own Netflix?
Yes.
As of when?
Netflix as of a couple of weeks ago.
And what made you buy it a couple of weeks ago?
Well, again, Scott, right now, since June the 1st, I switched over to a 2-year in development AI and ML-driven model as the basis for identifying when to get in stocks, when to get out of them. Tesla was one I got into right off the bat on June the 1st, and it's done tremendously well. Netflix was one that came on kind of version 2, version 3 of tweaks in the model. It's also done really well. The model got long hit at 331 in early May, but I bought it into the fund a couple of weeks ago. It's one of the larger cap tech stocks that I think still has a lot of room to run. They've proven, and it'll be interesting to see once we can compare them to the Disney results and the Warner Brothers results in a couple of weeks. Just how well they're doing. I think they're cleaning the clocks of the competitors. They're actually making a ton of money from streaming. Remember when that was sort of a far-flung idea? They're doing it. Free cash flow this quarter was prodigious.
So when I look at other mega cap names, because you haven't exactly been a mega cap kind of guy, right? I mean, you've owned a lot of the other higher multiple growth names. You told our producers that you like Meta, which reports earnings obviously next week. Do you own Meta?
Yes.
When did you buy that?
Same time as Netflix, a couple of weeks ago.
And because of the model telling you that, because the stock has had a huge run up before a couple of weeks ago.
Yeah, it has. And if I wish I'd been trading the model since December. The model got long Facebook or Meta on December 23rd at 118, and it has been long since. But I'm on version 3 of the model. I found that what works best in the portfolio is having a combination of the smaller speculative, some would say profitless tech companies, along with the big tech stalwarts. And I am trusting in the back-tested data that I've seen. Meta, Netflix, NVIDIA, Tesla, those are the large cap names that I like the most, but I've got a ton of the smaller speculative stuff. Obviously, the big winner since I was on last time with you has been walking up the. Then he decides that he wants to design a chairlift to take people. He doesn't just build the chairlift and then sort of walk away. He's got to stay involved. He's got to watch the chairlift every day, make sure that the thing's not cracking and breaking. I'm still involved. It's not a Jesus take the wheel moment here with the model. I'm going to continue to tweak it. So AI is going to continue to get better. A couple of years from now, we'll be on version 10 instead of version 1. But the results have been great so far.
I know, but when you get on the chairlift, you're guaranteed to go to the top of the mountain. It doesn't all of a sudden reverse and take you in the opposite direction. Is the model ever wrong? I mean, explain that.
Absolutely. The hit rate is only 53%. So the model's wrong a lot. And some would say, well, isn't that just better than a coin flip, Eric? Well, I'd say, Warren Buffett said the best money managers in the world are right 50% of the time only. So 53% is great. The trick with the 53% is that the winning trades, so the Carvanas of the world, when you do get into them, and the model got in at $11.85 on May the 7th. I got in when I started live trading it on June 1st at $15.30. It's had a huge run. The winners, more than make up for all the losses. So if you're operating at a 53% hit rate, you can do extremely well compounding over time. So there will be lots of busted trades, no doubt. But I'm betting that over time, this thing will
Notice
grow.
that sharp bounce, guys, just in case we get
markets and in
a
bad markets.
small
But see,
gap up or
Carvana's a
something
good
tomorrow.
example. Can we throw that
Not
back
sure
up,
if we
guys,
can
please?
continue to sell this
One
thing
month.
off unless we
Because
have
there's not just-
earnings
think I
like
saw it
Tesla,
correctly, the
Netflix,
stock's
some
up
bigger
almost a
companies.
double in a month.
But today,
Yeah, they're
like I
at
told you guys,
93.5%. Now,
today I
being
told you
the
guys,
human side of what you
these
do,
earnings
we
this
might maybe
week
look
give
at that and
us
say,
a
in
wide
terms of risk
variety
management that a model
of
can't tell a human brain
companies from all the
necessarily
sectors.
to
And what are
do
you
or
seeing?
override that.
Tech was weak,
Why wouldn't you look at
semiconductors,
that and say, you know what? This
the
is
other
an
ones, the
unbelievable
banks,
gain in an
beat
incredibly
this,
short
that,
period of time. I'm
and
gone.
what's happening today? You have the Dow rallying and the Qs selling the hell off.
They had come out and pre-announced
I called this. This is exactly what I was trying to tell you guys, because if you guys start learning this stuff, you guys can profit from it.
I was feeling great about myself.
I just completely didn't even think about it this morning until it was a little late. So these are the things I try to stress. Is like, if Tesla, Netflix, if like, what sector is it that's going to be weak? It's the sector that's at all-time highs. Or almost at all-time highs. Like, it's up at the top. They've rallied the most, and if they don't perform as such, they're going to be the first to go right back down to start the,
Carvana, it
so.
said over the last 6.5, 7 years, it was better to hold the line and stick with the long position, even though I gave up a 28% gain in one day. And what happened? The next day, the next week, the thing stabilized and it's gone from $18 to, I think it was $60 in the after hours last night. So I'm going to trust, the data. I guess if you don't want to say trust the machine, Scott, trust the data. Trust, what has worked with a stock like Carvana in the past. I can't hold it in my mind as a human for that and 300 other stocks. But with the help of AI and machine learning, I can do a much better job, populating the portfolio.
All right, we're going to leave it there. Eric, thank you. We'll talk to you soon. That's Eric Jackson, EMJ Capital, joining us. Straight ahead, the semis coming under some pressure today, and that's after a warning shot from one big player in the space about a deepening slowdown in the second half. We have the details and whether that cautious commentary could put a pause on the chip surge. We'll do that when Closing Bell comes right back.
crypto.com.
Welcome back to Closing Bell. A profit miss, cautious guidance as well from Taiwan Semi, sending the chip stocks lower today. Christina Partsinevelos following that, joining us now with a look at that space. Christina?
Well, Scott, it seems like the AI hype can only go so far. That's the message from TSMC management on their earnings call. And why is that? Because AI only contributes 6% of total TSMC revenue. Yes, it's expected to grow double digits in 5 years, but it's still not growing fast enough to offset the weakness in smartphones and PCs, which is a much bigger percentage of industry revenue. The stock you can see on your screen right now, selling off down almost 5%. It's bringing the SMH lower. Equipment names like we're seeing Applied Material, all of those getting hit hard because TSMC reiterated its CapEx spend at the low end of the range. Spending less means less revenue for equipment makers, which is why you're seeing a lot of them lower. Deutsche Bank points out that TSMC's delays with its Arizona fab will be a short-term negative also for these names, so there could be some pressure in the coming months. There's debate right now on whether now is the time to buy the dip for TSMC, especially if demand for electronics continues to be weak in the second half. Morgan Stanley and Mizuho say buy since TSMC is getting the bad news out of the way and long-term growth remains unchanged. JP Morgan thinks the stock will possibly reset lower just in the next few months, but gains over the next few years. TSMC alluded to a cash dividend. That adds to the long-term play for this name. Bottom line, though, Scott, AI compute demand exceeds supply, but we've got to deal with the PC smartphone business that continues to remain depressed. And still, no one, Jefferies, Bank of America, the list goes on. No one is budging on their buy rating for TSMC, so it could be a good opportunity to get in.
All right, good stuff. Christina, thank you. Let's get more now on how to play.
Still so exhausted, man. Just everything going on. It's just like,
it's good to see you.
maybe one day we'll get to the point where we got people in here and I can talk and be busy and not be tired. I get to looking at these screens and the amount of smoke that's sitting around these houses where I'm at is also another,
we're going to be remaining weak.
you know, health thing going on to breathing in smoke, being outside. I don't know.
Just look at the SMH.
Just exhausted.
The SMH is trading at 153.
So,
the other day on half,
I hope you guys had a great day. I know I
recorded a
didn't.
new all-time high, 153 today. Yesterday on halftime, I talked with you about the air underneath current price and the 50, 100, and 200-day moving average. You could apply that thesis to the SMH. The 200-day moving average is all the way down at 121. The 50-day moving average is all the way down at 143. So I think this is about technicals more than anything else. Christina did an excellent job in identifying that semiconductor equipment makers are going to be most challenged as a result of not just Taiwan Semi, but ASML as well.
But you gave me the reasons why you wouldn't think that these stocks would be at a high, the SMH. PC, slowdown, handsets, unless you believe that those have troughed. And maybe that's what the market was betting on, but I just wonder whether Taiwan Semi just said maybe, you know, not so fast.
Well, I think Taiwan Semi is more specifically about China demand. I also think ASML is talking about European demand. And you have to factor the macro into the semis, because the semis are the nucleus, they are the mobility, they are what the economy is today in 2023. Similar to what oil used to be. So if you were to tell me, and I heard the conversation with Ed Yardeni and Stephanie Link, if you believe in the economic sensitivity, if you believe that the economy avoids a recession, if you believe the economy is in a good place, then why wouldn't you believe that the very industry that represents what the economy is would do well as we move forward? And that's the semiconductor
I know,
industry.
but maybe people believe that these stocks are ahead of themselves because they don't believe that the economy is as strong as some would like to believe it actually is.
I don't agree with the fundamental aspect. I think the technical aspect is confirming what you're suggesting, that yes, these stocks are ahead of themselves and they can pull back to the supportive moving averages. Now, what do you do with all of that? First and foremost, I think you have to stay high up in quality. I've advocated for Broadcom, which I believe is at a reasonable valuation and is an AI winner. On Semi, that's my favorite semiconductor name. And NVIDIA seems to have this moat around their ability to participate in artificial intelligence. But lastly, I think the single most important thing that you could do for the semiconductors and overall for the market is what we talked about yesterday with Brian Belsky. If you're concerned that the technicals are stretched right now and need to fall back further, go to an equal weighted
Why
strategy.
do you only assume it's a technical thing? Like if maybe people have been too fixated on thinking that the AI related bubble is in the Magnificent Seven type names.
Okay.
But maybe the place where it's more represented is in the chip stocks, where even if you're not like the SMH isn't all filled with AI chip related things, yet the SMH is at a new 52-week high almost every day.
Because it was first in, first out. It was first in to the economic contraction that started in 2022. That's my belief. I think the economic contraction started in 2022. I believe the semiconductor industry was the first industry that went into recession, and I believe it is first out. I think the semiconductor industry, as we look forward, sees a better 2024. It sees China demand reaccelerating.
Right.
It sees inventories beginning to build once again.
Joe, thanks. Nice
Thanks,
to turn over. All right, coming up, we're tracking the biggest movers as we head into the close, including a pair of stocks in the financial space having their worst day in more than 3 years. Closing bell, right back. 6:15 till the closing bell. Let's get back to Christina Partsenevelos for a look at the stock she's watching. Christina?
Scott, let's start with Discover Financial because it is down.
I think I'm gonna try and do maybe the watch list a little earlier. I gotta figure something out with like sleep, and, like doing things.
Right now about it. The company also said it's received a separate notice from the FDIC related to a
I'm just speaking out loud, I guess.
And it's pausing
Just so
its
maybe I can get to
program
bed a
during
little
the
earlier and I'm
internal
not so
review.
tired.
A lot of missteps there,
And I don't,
down 16%.
fall asleep on
Let's
this,
talk about
just
Equifax.
sitting
It
here.
is having its worst day since 2018. The credit bureau reporting mixed
gotta do
results, but
something.
slashing its outlook, citing the slowdown in U.S. hiring and weaker mortgage markets. Executives also say that they expect.
I don't know. I think it's just more than just sleep though, because usually I'm okay. I'll take my little nap or something at lunchtime, and then I'm good. But now it's just like I'm exhausted and kind of just, yeah. I got a lot going on. Just really killing me. So if I do it earlier, I'll post it in the chat.
Today. The results of the Twitter question we asked, which lagging sector of the market about to have a big catch-up trade? It is close. Healthcare, though, is the winner. 36% of the vote. A very, very close vote. Thank you for voting. Coming up, the year's red-hot home builder rally taking a bit of a breather today. A number of those names have reversed lower. After hitting record intraday highs, there they are. KB Home and Pulte Group, the biggest losers, down 5%. We got that story and much more when we take you inside the market zone. All right, we're now in the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down the crucial moments of the trading day. Diana Olick on the surprise reversal in housing stocks after 52-week highs earlier in the session. Stephanie Link back for how she's playing J&J amid today's rally, one of the best Dow performers today. Mike, I'll go to you. Dow kind of day, not much else working.
It is still more rotation than it is kind of an escape from the market in terms of net money flow, although the top has started to spin slowly and wobble a little bit here after this rally. So as we would have said coming into the week, markets built up a lot of gains in a short period of time, getting a little bit stretched. There's been a short squeeze element of it. There's been a momentum chase element of it. There's been a let's position for earnings in the old favorites. And so nothing in the way of net damage to speak of yet, really just unwound in the S&P, a couple of days worth of upside. But, you want to be on alert for the fact that maybe you got a lot of house money built up and see where it goes from here. The Netflix and Tesla damage on the reactions to their results, so to speak, is relatively contained. But if it piles up and that becomes the theme, that's what you have to look out for next week.
I was writing those names down before you mentioned them, thinking that tomorrow will be the tell, right? If you get the buyers come in, that's sort of emblematic where the psyche is going to be in terms of big cap tech that's done really well, and if the buyers come in on the dip.
In terms of those names, for sure. But I would look for things like Microsoft, which I consider probably the most important stock in the
nicely and then going on.
Well, look, D.R. Horton had a big beat this morning, guided higher the quarter, and Chairman said despite higher mortgage rates, builders are reaping the benefits of the shortage in the existing home market. Nothing wrong with the fundamentals, but as you said, look at the stock. It shot higher to start the day, up nearly 10% in the first 40 minutes in reaction to that report, but then it falls to the low end of the range. So what's up with that and the other stocks that it took along with it? Well, take a look at how far it's come, up about 45% year to date. So the sell isn't really about the fundamentals. Bob Pisani talks about this all the time. It's about distribution, and traders may be feeling that at this level, this high valuation, there just isn't much farther to go, so they're taking the top and taking off.
Maybe it's nothing more than that. Diana Olick, thank you very much for that. Stephanie Link, J&J, one of the best performers out of the Dow today.
Still down 5% in the year, Scott, trading at 16 times forward earnings, and you get 2.8% dividend yield. They've been raising the dividend for 62 consecutive years. The beat was from pharma and med devices. Pharma came in at 6.2% constant currency. Med devices almost up 10%. And that's not a surprise because we know a month ago, United Healthcare and Humana both talked about higher utilization rates. That's very good for hospitals, very good for the device companies. And Johnson & Johnson pulled through.
Michael, it's going to be easy or interesting to see, I should say. United Health, these kinds of stocks, whether healthcare's got some room to run here.
Yeah, it could be the next phase of where we're headed in this market, in the sense of the flip side to in the spring or going into the spring, it seemed like all the oxygen was being consumed by the same NASDAQ stocks. What it means is there's a whole lot of market cap that was.
You guys have a great day, great night. I wish you all the best. Thank you guys for joining us. A little tired, a little exhausted. It's Thursday. It's almost the end of the week, so you guys have a great night. I'll have a watch list out tonight. And yep, you guys have a great night. I'm going to figure some things out. Figure out what I'm going to do. Figure out what I'm going to do with the stream. Figure out what I'm going to do with myself. You guys have a great night.
Do you think is the next source for this market if it's not going to be healthcare?
I think I'm a little more focused on whether we need to kind of settle back a little bit and just sort of reload.